Yeah. Hopefully, let's see. Sir, this.
Good evening, ladies and gentlemen. We extend our heartfelt gratitude to our title sponsor, Standard Chartered Bank, Platinum sponsor, Ugro Capital, Gold sponsor, Kia AI, and Knowledge partner, Care Edge Analytics and Advisory, for their generous support and commitment to this conference. Their partnership has been instrumental in making this event possible, and we look forward to their continued support to IMC. Thank you for your invaluable contribution and for sharing our vision. So, Namaskar. Good evening, ladies and gentlemen. On behalf of the IMC Chamber of Commerce and Industry, it gives me, your host, Selby Nambishan, immense pleasure to extend a very warm welcome to all our esteemed guests, distinguished speakers, and delegates to the IMC Banking and Financial Services Conference, Shaping the Future of Financial Services, where investors, asset managers, and financial leaders gather to identify the next wave of growth. We look forward to synthesizing forward-looking insights on global market trends, breakthrough innovation, and strategic management of risk, thereby informing and shaping investment opportunities for the financial services of tomorrow. Delegates, kindly note the complete speaker profiles and detailed conference agenda can be conveniently accessed and downloaded by scanning the QR code located on the reverse of your delegate badge. It is said that lighting of the lamp amounts to awakening of the Atma Jyoti within oneself. Light symbolizes knowledge, purity, and wisdom. It shows the bright path forward. So let us initiate the inaugural session, which focuses on how AI-empowered banking, NBFC insurance, and capital markets will look in 2047 with the traditional lighting of the lamp for prosperity and success. To do the honors, may I request Mrs. Sunita Ramnathkar, President, IMC Chamber of Commerce and Industry, to kindly welcome and accompany our distinguished guest of honor, Dr. Alok Pandey, Additional Secretary, Department of Investment and Public Asset Management, Ministry of Finance, Government of India, for the lighting of the lamp, and the other dignitaries joining them for this auspicious moment are Mr. Shachindranath, Co-Chairman, Banking, NBFC and Finance Committee, IMC, and founder and Managing Director, Ugro Capital. Professor Mahendra Kumar Chauhan, President-elect, IMC Chamber of Commerce and Industry. Dr. M. Narendra, Chairman, Banking, NBFC and Finance Committee, IMC, and former CMD, Indian Overseas Bank. And Mr. Ajit Mangrolkar, Director General, IMC Chamber of Commerce and Industry. Request all to come forward for the lighting of the auspicious lamp. A loud round of applause, ladies and gentlemen. Thank you. And may I request all the dignitaries to take their designated seats on the dais. Can I request all the dignitaries to kindly take their designated seats on the dais? May I request Mrs. Sunita Ramnathkar, President, IMC Chamber of Commerce and Industry, to kindly welcome and accompany our distinguished guest of honor, Dr. Alok Pandey, Additional Secretary, Department of Investment and Public Asset Management, Ministry of Finance, Government of India. Mr. Sachindra Nath, Co-Chairman, Banking NBFC and Finance Committee, IMC, and Founder and Managing Director, Ugrow Capital. Professor Mahendra Kumar Chauhan, President-elect, IMC Chamber of Commerce and Industry. Dr. M. Narendra, Chairman, Banking NBFC and Finance Committee, IMC and former CMD, Indian Overseas Bank. And Mr. Ajit Mangrulkar, Director General, IMC Chamber of Commerce and Industry. Kindly take your designated seats on the dais, dignitaries. And to initiate the conference, may I request Mrs. Sunita Ramnathkar, President, IMC Chamber of Commerce and Industry, to present the welcome address and set the visionary tone for the event. Over to you, Madam Ramnathkar.
Ladies and gentlemen, it gives a very good evening and a warm welcome to all of you. It gives me great pleasure to welcome you at the IMC Banking and Financial Services Conference on the theme Shaping the Future of Financial Services, organized under the auspices of the IMC Banking, NBFC and Finance Committee. At the outset, I extend my sincere gratitude to our distinguished speakers, panelists and moderators who present the insights which will enrich us today in today's discussions on the future of India's financial ecosystem. It is a privilege to welcome Dr. Alok Pandey, Additional Secretary, Department of Investment and Public Asset Management, Ministry of Finance, Government of India. We are grateful to him for joining us and delivering the inaugural address. This conference comes at a significant time for India's economy and financial sector. As India progresses towards the vision of Viksit Bharat, banking and financial services will play a key role in driving growth, innovation, resilience, and financial inclusion. The ability of our institutions to adopt and remain globally competitive will shape the next phase of India's economic journey. Today's conference will feature discussions on important themes, including transformations in the banking landscape, digital lending, balancing inclusion with responsible credit, transformation of insurance in digital era, the future of FinTech, and the road ahead for the next decade. The sessions will also focus on digital transformation, cybersecurity, customer-centric innovation, financial inclusion, evolving regulations, and ESG considerations. We are honored to have with us an eminent lineup of experts representing policy, regulation, banking, insurance, fintech, and technology. Their insights will help us better understand the opportunities and challenges shaping the future of financial services in India. I would also like to thank Dr. Narendra, Mr. P.D. Singh, Mr. Sachindra Nath, members of the IMC Banking, NBFC and Finance Committee, our speakers, moderators, and IMC team for their efforts in organizing this conference. We are grateful to Standard Chartered for associating with us as the title sponsor. We are also acknowledge Ugrow Capital as the platinum sponsor and Kia AI as a gold sponsor and Care Edge Analytics and Advisory as the knowledge partner. To all our delegates and participants, I extend a warm welcome. We hope today's deliberations will be insightful and create opportunities for meaningful networking and collaboration. Before I conclude, allow me to briefly mention that the IMC Chamber of Commerce and Industry is one of India's premier chambers with a legacy of over 100 years. With more than 5,000 members and 150 affiliated trade associations, IMC represents over 400,000 businesses and establishments across sectors. In conclusion, I would once again welcome all of you, and we look forward to an evening of meaningful discussions and partnerships that will contribute towards strengthening India's banking and financial services sector. Thank you for joining us this evening, and we wish you a productive and rewarding conference. Thank you.
Thank you, Madam Ramnathkar. The vision you shared has truly set the ball rolling and energized all participants as we prepare to explore key topics in financial arena. But before we initiate the panel discussions, may I request Mrs. Sunita Ramnathkar, President IMC, to felicitate our esteemed guest of honor, Dr. Alok Pandey, Additional Secretary, Department of Investment and Public Asset Management, Ministry of Finance, Government of India, with a memento as a token of our appreciation and gratitude for sparing his highly valuable time for this conference. A loud round of applause, ladies and gentlemen. May I also request Mrs. Sunita Ramnathkar, President IMC, to felicitate our esteemed guest, Mr. Shachindra Nath, Co-Chairman, Banking, NBFC and Finance Committee IMC, and Founder and Managing Director, Ugro Capital, with a memento as a token of our appreciation and gratitude for sparing his highly valuable time and supporting this conference. May I request all the dignitaries to come together for a group photo? A group photo. Thank you all. A loud round of applause, ladies and gentlemen. They have come here to address you. Thank you. May I now request Dr. M. Narendra, Chairman, Banking, NBFC and Finance Committee, IMC, and former CMD, Indian Overseas Bank, to present the introductory address to set the stage for today's deliberations at the conference. Over to you, Dr. Narendra.
Thank you. At the outset, I extend a hearty greetings and welcome to all of you. And I am very happy that during the working day in the afternoon level, you are all kind enough to come and be a part of this IMC 16th Banking, Insurance and NBFC this conference. I am also happy that after some time gap, we were able to organize this in a BKC at a Sofitel due to the overwhelming support other than the IMC by Mr. P.D. Singh, CEO of Standard Chartered Bank, and he's the vice chairman and very gracious man. Even though we requested him here, he said, I will take the next session. So, such a great man who was earlier JP Morgan, now is the CEO of Standard Chartered Bank for the last 1 year. And we are also grateful, another vice chairman, in the true sense of responsibility, Mr. Shachindra Nath. He has been also gracious to help us in this sponsorship, because that is also comes as a very great support. And we have Mr. Manoj Chopra from Kia AI, which is actually headed by Rajesh Mirzankar. They supply all technology to the bank. So this three combination, and we have Swati Agrawal. She is the CEO of Care Edge and Analytics, who were kind enough to provide the knowledge report. So this is in a way all that has contributed, and also all of our active members in the bank committee. We have a set of committee members, and all of them have put in efforts, and I'm sure you by the end of the day, evening by 8:39, you will definitely have a great satisfaction that we have joined here for a very valuable discussion, and the takeaways are more. As rightly said, today it is the right time to introspect and see how the financial services, how the NBFCs, insurance, FinTech and capital market are likely to shape up in the future, as Madam has said, towards March for 2047, our Vikasit Bharat. From hardly around now $4.5 trillion, we have to achieve $30 trillion. So as such, the financial institution are the major contributor to the GDP growth, and their credit to GDP ratio compared to globally, we are still at a very lesser level. That means, of course, the absorption of credit as a culture for growth that should take place not only at the corporate level but also at the individual level and in our everyday, because that multiplication of investment results in growth. Now, India, in spite of the government spending quite a lot in the front end, but at the back end, in spite of our best efforts of our finance minister or prime minister, that the private sector initiatives investment is slightly lesser. So that has to go through, and they, one side, sometimes they go to the market for bond and equity. But at the same time, when banks are efficient, banks are able to provide at a lower interest, then definitely for their expansion, they come to the bank. So in a way, they cannot avoid, because even on the other side, whether it is equity or the bond, it is again a financial institution which will give support. So in that respect, towards our marching past to the 2047, what are the changes taking place? One is emergence of new technology. So that is where how AI-powered banking, NBFC, insurance and capital markets will look in 2047. We have Raj Nair, our past president, who has been empowering AI, and he has been a very advisor to quite a lot of corporates and the institution. So that our Sunita Madam Ramanathkar, our president this year, she took the theme, everything should have been AI empowered Vikasit Bharat. So in that respect, when we adopt all these newer emerging technology like AI, blockchain or quantum computing or metaverse or any other technology, it has to be ethical, it has to be democratic, it has to be a transferable, in the sense transparency or disclosure, and the true framework which are given by the Reserve Bank of India, as well as in the AI conference where Manav, some people you can literally see in your whatever Google, what is the meaning of Manav? That was the slogan given by our Prime Minister. In that true sense, whether it is a FinTech, whether it is a bank, whether NBFC, they have to empower or adopt the technology. It is for the inclusive growth. It is for deep penetration of financial services. So our JAM Trinity did a wonderful work, and today almost 65 crores of such accounts are there, and balance has gone to 3.2 lakh crores. Now, as the balance is there, the other side, government has saved quite a lot of money on direct benefit transfer. Quite a lot of government saving, government and central government savings are going, or direct transfer going. So they have also been able to save around 3.5 lakh crores of money, which otherwise would have gone to duplicate account or other things. So now, how these accounts can be converted through into AI, and with the unified lending interface, ULI, as we had UPI, which has been very successful through public digital infrastructure. Today, how we use the lending as through the ULI method to see that frictionless credit, and that aspect banks have to do quite a lot, because even in MSME, we have around 25 lakhs crores of credit gap. In spite of lending MSME, today banks are more focused on individual lending, that is retail lending, and MSME lending, and agriculture. Corporates' shares come down. It may be that as we grow into the Vikasit Bharat, corporate also will seek more products. One area I am saying that banks have to play a very important role in the ecosystem of wealth management and risk management. We cannot only give a saving product, because it has to be combined with other. Because of that only, during COVID and later, a lot of resource mobilization became a challenge for the bank. And the banks are also planning that how my money is going to the equity market, but ultimately it will come to the banking system. So that is another area. Now I know Madam is coming here. Correct, no? So I am very grateful to not only our Dr. Alok Pandey. He has been my good friend and my philosopher and mentor in our Indian Overseas Bank as the nominee of the Government of India. And he is currently Additional Secretary, in the Department of Investment and Public Asset Management, Ministry of Finance. We all will give a big wishes to him that in another year he will occupy the position of secretary, and we will all once again invite him for our organization. Thank you very much.
Thank you, Dr. Narendra, for that brief introductory address that emphasizes the need on shaping the future of financial services through strategic insight, innovative technologies, AI, and collaborative leadership. Ladies and gentlemen, please join me in warmly welcoming Mr. Sachindranath, Co-Chairman, Banking NBFC and Finance Committee, IMC, and Founder and Managing Director, Ugrow Capital, to deliver the special address on how AI-empowered banking, NBFCs, insurance, and capital markets will look in 2047, a visionary exploration of the transformative future of India's financial ecosystem. Over to you, Mr. Nath.
Dr. Pandey, thank you, Narendraji, for inviting me over here. Ajitji, Sunitaji, and Professor Chauhan. In the 1980s, if you'll remember, India and its people waited for almost 7 years for a telephone connection. Today, credit gets approved in 7 minutes. By 2047, financial services may take just 7 seconds. And beyond that, it may take no time. Because it will simply happen around you without you asking. You all remember Mr. India, Anil Kapoor, the invisible hero, a man who with one small device strapped onto his wrist could vanish entirely, walk into a room full of people and not to be seen, most through wall of power and bureaucracy without friction, accomplish extraordinary things while remaining completely undetected. The villain, Mocambo, had an entire intelligence apparatus hunting for him, cameras, informants, checkpoints, and Mr. India simply walked past all of them. I suspect many of you in this room have had the same feeling, trying to get a loan sanction from a bank, the form, the branch visit, the resubmission, the waiting, the call that never comes. You're right. They're creditworthy, you're solvent, you're a paying customer, and somehow you remain invisible to the bank. By 2047, financial services itself will become Mr. India. Not the customer being invisible, the institutions will become invisible to the customers. So seamless, embedded into the life that you will not experience it as a banking or lending or insurance at all. You will not go to the bank. Banking will happen when you start a business, when you plant a crop, when your child begins school. You will not seek credit. Credit will arrive at the exact moment of need, calibrated to your cash flow, your purpose, before you have made a call or filled a form. Mocambo was terrified of Mr. India because he could not see him coming. The financial institution of 2047 that will win will be the ones their customers do not need to think about them because they are already there, already working, already anticipating. AI is already reshaping every layer of financial services faster than most institutions' roadmaps anticipated. In credit, AI model today construct a more accurate picture of a borrower's repayment capacity in 40 seconds than a credit officer could do in 4 days. From bureau score, GST filing, UPI history, supply chain flows. In insurance, parametric models are replacing claim-based one. Your crop insurance becoming automatically when satellite data confirms drought, claims friction engineered away entirely. In capital market, AI-driven advisory is no longer the preserve of large institution. It is becoming accessible to a 10,000 rupees SIP investor in a tier 3 town as to a sovereign wealth fund. The pace of change is not linear. It is compounding. What we see today is not the destination. It is the foundation of the destination. And yet, as we watch the transformation, there is a question that this industry has not answered with sufficient honesty. AI is no longer just a tool, it is becoming the decision maker. I watched a lot of fiction movies just to learn more about AI and technology. Recently, I watched a film called Mercy. that I think about this in this context. In that film, the judicial system of LA has been handed over to an AI. A clean, efficient, bias-free, that is the promise. Every case is assessed on pure data, no favoritism, no delay in justice, which is delivered in just in minutes. And the film shows you that what actually it means. An AI with no capacity of context, no understanding of circumstances, no ability to weigh the human truth and feeling behind the data point. An algorithm that is perfectly consistent and therefore perfectly incapable of justice in the cases that matters the most. The financial services parallel is the exact. When a biased model denies credit to a perfectly credit-worthy business owner because his data pattern does not fit the trained set, who is accountable? When zip code becomes an underwriting proxy for community, who is accountable? The efficiency of algorithm is not sufficient justification for its authority. Governance is not the enemy of innovation. It is the condition under which the innovation is permitted to survive. India has approximately 63 million MSMEs. Fewer than 15% has never accessed formal credit. The remaining 54 million businesses, the backbone of India's employment, India's manufacturing, India's trade, run on money lender capital or remain chronically underinvested. That is not a welfare problem. It is a market failure. And AI gives us the tool to correct it, though embedded lending in commerce platforms, supply chain finance against purchase order, cash flow based underwriting that requires no collateral and no branch visit. The institutions that figure out how to serve these 54 million businesses at scale profitability with appropriate risk control will define the competitive landscape of 2047. The institutions that do not do that will find themselves defending a shrinking market share that is moving around them. When I look at where Indian financial services has come, from a 7-year telephone queues to 7-minute credit approval, the transformation is extraordinary. When I look at what remains, 54 million unserved businesses, 500 million individuals outside the formal insurance net, a capital market universe that has barely begun its retail journey, I feel something I can describe as impatience. We have the technology, we have the regulatory architecture, we have in this room the collective intelligence and the institutional weight to drive this forward. The work has just started, but the most consequential chapter has not yet been written. Picture abhi baki hai mere dost. Thank you very much.
Thank you, Mr. Nath, for your inspiring and forward-looking address. Ladies and gentlemen, please join me in warmly welcoming our distinguished guests on the dais to officially release the landmark knowledge papers on shaping the future of financial services, expertly prepared by Care Analytics and Advisory Private Limited, CAAPL, for this conference. May I also request Mr. P.D. Singh, Co-Chairman, Banking, NBFC and Finance Committee, IMC and CEO, India and South Asia Standard Chartered Bank, and Mrs. Swati Agrawal, CEO, Advisory, Care Analytics and Advisory Private Limited, CAAPL, to join us on the dais for the release of these papers. The visionary insights reveal how competitive advantage in today's global financial systems is driven not by scale alone, but by seamlessly integrating data, intelligence, and digital infrastructure to create technology-enabled, interconnected ecosystems, with AI as the foundational decision-making layer, transforming underwriting, fraud detection, customer engagement, compliance, and investment management. As they take the stage, please scan the QR code displayed on the screen to instantly download and access these groundbreaking papers.
We are growing green, so we don't print as per our Prime Minister's conservation. So you have to take the one QR. Copy will be available to all of you. Please.
World is going technically forward, so the code is available. You just have to scan it to download the papers. And may I request all to stand for a group photo? It's done. Please, can I request all the dignitaries to come together for a group photo? Please hold the knowledge paper. Please hold the knowledge paper for a group photo with the knowledge paper. The right side face up. Thank you very much, dignitaries. Ladies and gentlemen, distinguished delegates, it is my distinct honor to welcome a visionary leader and a driving force behind India's public asset transformation, Dr. Alok Pandey, Additional Secretary, Department of Investment and Public Asset Management, Ministry of Finance, Government of India. With a sharp strategic mind and deep expertise in public finance, Dr. Pandey has been at the forefront of modernizing how the nation manages and unlocks value from its public assets. Under his stewardship, DIPAM has advanced bold reform agendas, enhancing transparency, maximizing returns from sovereign holdings, and catalyzing private investment to fuel India's growth story. His forward-looking approach marries sound governance with innovative financing, helping create vibrant markets and stronger public sector performance. We are privileged to have with us today a policy maker whose insight, leadership, and commitment to reform are shaping the future of India's financial landscape. Please join me in giving a warm and enthusiastic welcome to Dr. Alok Pandey. Over to you, sir. Thank you.
Madam Sunita, President IMC, Chauhan Saab, President-elect IMC, Shachin Nath ji and Naren ji, Chair and Co-Chair of the Banking Committee of IMC, Ajit ji, the DG IMC. Ladies and gentlemen, thank you for having me here. It's a proud privilege to be here with you all. And I don't know whether so many adjectives that were said about me were AI generated or they were real. But I would just like to share an anecdote about, a poor person. I was associated with the Prime Minister's Jan Dhan Yojana in both, the writing down the first draft and then in the implementation part of it. And as we went about opening the banking accounts, there was a poor fruit seller. His name is Chitranjan. And he was from Bihar. So one day I asked him, did you get your account opened? And he said yes. So I asked him, what did you do with that account? So he said that, I got a debit card along with that account, and that I have given to my brother who studies in Patna. So I said, why did you give him your debit card? He says, because every time I have to send fees, his school fees, I have to send it through somebody and it gets delayed. So I asked him, and now what you do? He says that now I deposit the money here and my brother withdraws it there. So I said, wow. And what if he withdraws more? I mean, if the fees is 500 and let's say he withdraws 1,000, he says, how can you withdraw like that? I get an alert on the SMS. So I was amazed. I mean, we had just created an ecosystem in the country and our people had understood the logic behind it without, and we are a big country. We are not able to reach out to our people the way we should. And in fact, there has been a lot of emphasis by the government in reaching out to the citizens and communicating whatever the macro policies that we are making for the citizens. But it's not very easy. But thanks to the understanding of our people, our things get absorbed very fast. Compared to, I'll give you a counter example of this. A friend of mine in early 90s, when he went to study in the United States, he went to a shop and he bought a pair of shoes for about $50. And as he was coming out, he saw a discount of 10% available. So like Indians, we never lose discounts. We always... So he went back and he said that, there was a 10% discount available on this and, so please give me the discount. And the lady, just worked on the computer and She said, yeah, 4350, and returned him, 6.5. So it was 10% as per the computer. I mean, for us, for in India, if you were to ask even a poor vegetable vendor, I mean, this is something which comes to us very naturally. So my point is that anything that we do out here, please keep in mind that our people are generally very smart in terms of their understanding. Our job is basically to create the ecosystem which helps them to manage this. So today, I'm not really dwelling on the banking and the financial services side of it, because you have subject experts. Narendra ji has already indicated, the banking route. I will just little bit talk about the capital markets and how AI is going to influence the capital markets. A little bit about the work that we do in Deepam. We do three primary tasks. One is that we work for the value creation in CPSCs. If you look at it, before the present crisis happened, all the PSU stocks had approximately risen 4 times of their value in 2020, and we had taken some very distinct steps. If I have the time, I will detail those steps. But that is one part of our job, that is the value creation in the public sector enterprises. The second thing that we do is to work on the privatization, which have been approved by the Union Cabinet, and Air India is a shining example of how the privatizations can be carried out. We have after that done smaller ones like Neelanchal Ispat and Ferro Scrap Nigam Limited, but they were really very small ones and unlisted entities. So many of them are still in the pipeline. That is the second part. And the third part that we do is what we call the minority stake sales. You must have not noticed that there were about 18 companies that we have listed in the last about 11 years or so. And LIC is the biggest one amongst them. When we listed it, it added about 6 trillion to the Indian capital markets. So that is the kind of work that we have been overseeing in the public sector side, both banks, financial institutions, as well as the other public sector entities. Now, in terms of the capital markets, if you look at it, we have very distinct components. Besides the regulator, you have the 2 stock exchanges, you have the depositories, you have the registrars, you have the brokers, you have the investors, you have the listed entities. I mean, you have so many components, and each one of them can actually increase their efficiencies simply by adopting AI. You would have heard recently that the SEBI chairman, he talked about Sudarshan, their AI tool, they have weeded about 1.2 lakh posts, which were advisories, and according to SEBI, they were not really approved ones. I mean, they were not being disseminated by people who were registered with SEBI. If you are registered with SEBI, then there is a certain degree of do's and don'ts that you have to do. But apparently these people were not doing it, so they got deleted. So that's one side of it, increasing the efficiency part of it. And like Mr. Nath also mentioned that, you will be having investors, big and small, they will have same access to the AI tools, and they will be able to make very good investment decisions. Similarly, you will have the brokers who can understand the psyche of their customers, and apparently they can optimize it. So this is all good from the efficiency point of view, but I would like to draw your attention, ladies and gentlemen, to something higher than this. What if the AI really acts as a disruptor in this space, and you do not need so many entities? Think about it. If you can have a kind of an ecosystem where people are able to self-regulate, the role of the regulator itself goes down, the role of the investors complying with those standards that the regulator has is automatically driven by AI. Perhaps you will see that this area would actually see a lot of consolidation, and therefore we need to ponder over this question whether all these components would be needed in the AI stage. Today, if you look at it, there is a lot of flux in the world of AI. If you would have noticed, Anthropic CEO has said that you might actually not even need softwares in the future, and Claude is one example which it can definitely generate software. So that's a big challenge for our software companies. Now, wars are being fought by AI. So in the present Gulf crisis, there have been several reports that AI has been used for warfare. That's not the kind of intent that probably the developers of AI would have had. But for the purpose of ours, let us just look at it from the from a fast forward kind of a view, that can we have a group of subject experts from government, SEBI, merchant bankers, brokers, and possibly we in Deepam, we can play a nodal role in kind of coordinating these things to evolve into an ecosystem which is actually AI driven, but it cuts down on a lot of the costs that even today the investors have to face. So that would be, my kind of recommendation to you. Also, I think going forward, if AI has to be adopted in a country like India, you would have read recently Sam Altman said that after the launch of ChatGPT 2.0, India generated 1 billion images in a matter of weeks. 1 billion is like 100 crore images. And that is not a small number, but yes, as users of AI, we would definitely be attracting a lot of advanced developments because we are, just like a mandi, we are consumers. So obviously there will be a lot of people who will be trying to come in, wanting to make revenue because of the large population that we have. But our job is to ensure that we develop our homegrown AIs in field like, defense. We are already seeing that, wars in the future are going to have this as a major component. We also need to have AI in space usage. We need to have AI in our Ministry of Home Affairs, where we kind of do very, very important tasks for the nations. Today you would have heard the Honorable Home Minister declaring that India has become free from the left-wing extremism. So many of the policing functions can actually be driven in a much better way by the use of AI, but definitely we would need our homegrown solutions as we progress in that space. So I'm just leaving with these few thoughts for you, ladies and gentlemen. Before I close, I would just like also to mention this fact that the kind of power usage that AI requires, we have to take that into account. In a country where still you will find people struggling to get basic electricity, the kind of power that we are talking about in AI, OpenAI has already said that they are going to build their own power station and that they would not be drawing power from the grid. A government controlled grid, that's not what they want. They want to have their own power station. So the costs of actually playing with AI or using AI, only time will tell how far this is going to scale, because capital market experts have been saying that this is also a bubble which will burst. But that is what, as I said, time alone will tell. Thank you so much.
Thank you very much, Dr. Pandey, for your insightful and inspiring address. The valuable perspectives have greatly enriched today's discussions and provided meaningful insights to all present here. As we conclude our inaugural session, may I request Professor Mahendra Kumar Chauhan, President-elect, IMC Chamber of Commerce and Industry, to kindly take the podium to present the vote of thanks. Over to you, Professor Chauhan.
Good afternoon. Dr. Pandey, you talked about you worked on Jan Dhan Yojana with Prime Minister, and that reminded me of Jam Trinity that we have been talking about. I want to share a real experience of financial inclusion, which sort of as a result of this Jam Trinity happened. I was chairman of Fino Payment Bank a few years ago, and we created a smart card for the people, particularly the poor women who used to vend and sell vegetables and fruits by the roadside of the Dharavi. And as you know, Dharavi is an area where husbands in the family hardly earn, women earn. And when this poor lady would earn maybe 200 rupees in a day after selling vegetable and fruits and all, in the evening when she'll go home, husband was drunk and would beat her and take away the money from her. As a solution to that, what we did is, using biometric technology, we created a smart card and created the banking account for those women. Early in the morning at 7 o'clock, our bandhus, we used to call them, feet on street bandhus, would go there and give 500 rupees to these women. These women will go to Mandi, as you talked about, will buy their vegetable and fruits, and by swiping the card, the debit was created because 500 rupees was given to them. During the day, she would vend and sell these vegetables and fruits, and in the evening, maybe she will earn 1,000 rupees out of those 500 rupees. Evening 6:30, 7ish, our Bandhu will again go back on the roadside of the Dharavi, take those, out of those 1,000 rupees, 800 rupees or 900 rupees from the woman, and swipe and give her the credit. She goes back with 100 rupees. Before she reaches home, she buys eggs, she buys bread, she buys something else for the home. And by the time she reaches home, she has hardly 10 rupees leave with her. Now, husband cannot beat her and take away the money that she has earned during the day. That was the real financial inclusion, sir. And that's because of the Jan Dhan. So, 3 cheers for Dr. Pandey. So let me come to the theme of today, which is shaping the future of financial services. And when we talk of future, I think we talked about that India is soon going to be the 3rd largest economy of the world. And if we have to accelerate this process of becoming 3rd largest economy, and I think Dr. Narendra talked about that by 2047, Viksit Bharat will have 30 trillion. If we have to become 30 trillion, then there has to be a collective effort from all the ecosystem players, which is banks, insurance companies, NBFCs, and what have you, FinTechs, and all of them. So here my proposition to all the speakers that are going to talk is 2 things. First of all, AI, there's no conference which can be completed without talking AI, and Dr. Pandey alluded a lot about that. How can we leverage AI for the force for good? How can banks, insurance companies, NBFCs, and FinTechs can become force for good? And if that can be pondered by these speakers here, I think that will be a great takeaway for our participants. As a result, obviously, if you can touch upon as to how the growth can be inclusive growth, because any growth which is not inclusive will not be really of any much consequences. So these are the 2 propositions that I place, in front of our all speakers. I know Dr. Narendra and Mr. Nath, have structured the conference in such a nice way that almost most of these sessions are covering those, but specific requests for these 2 things. So let me come to my formal duty of proposing a vote of thanks. Dr. Pandey, Ma'am Sunitha Ramnathkar, Mr. Narendra, Mr. Sachindra Nath, and our own Mr. Ajit Mangrulkar. It's my great privilege to propose a vote of thanks on this flagship conference of Indian Merchants Chamber with a theme Shaping the Future with Financial Services. The inaugural address by our chief guest and guest of honor, Dr. Alok Pandey, Additional Secretary, Department of Investment and Public Asset Management, Ministry of Finance, Government of India, has set the tone, sir, for us. And rest of the day, the discussion will follow around that, sir. We are grateful to you to spare by coming here all the way from New Delhi and sparing your valuable time and addressing the IMC Banking and Financial Services Conference. Thank you very much, sir. A vibrant and resilient banking sector is at the foundation of India's economic growth. The investment that banks make today will not just guide their future growth, but will also help them institutionalize innovation amidst a potentially turbulent global macroeconomic scenarios. As we come to the end of this inaugural session, I'm confident that the conference will throw up many interesting perspectives on the theme of conference, that is Shaping Future of Financial Services. We look forward to hearing our eminent speakers as we go along. I would like to express our gratitude to Mr. Narendra, who is the chairman of the Banking Committee, Mr. P.D. Singh, co-chairman, IMC Banking Committee and NBFC Committee, and also for sponsoring this. Thanks, PD. Mr. Sachindranath, co-chairman, Banking and NBFC Committee, again for participating in structuring this conference and also supporting it. Ma'am Pooja Bharwani, I see her in the audience. She is a member of the IMC Banking Committee. So for all of you, you have conceptualized this conference so beautifully well. And I'd like to take this opportunity to thank our title sponsor at the end, Standard Chartered Bank, our platinum sponsor, Ugro Capital, our gold sponsor, Kia AI, our knowledge partner, Care Edge Analytics and Advisory. We have Madam Swati here for their support towards the conference. Without their gracious support, it would not have been possible to hold this event. We look forward to their continued cooperation in our future endeavors. Our sincere thanks to media representatives here. This inclusive growth and the idea that we are going to generate here to take it to the masses or a larger audience, I think our media friends have a great role to play. So I want to thank you in advance for covering these stories. And last but not the least, IMC team, a big round of applause for IMC team, which includes Sanjay Mehta and Sheetal Kalro and the entire team. Thank you very much and wish you great day with great deliberations. Thank you. Sorry, yes, I must. How could I? The backbone of this committee is Bharti Salunke. A big round of applause for Bharti. Thank you.
Thank you, Professor Chauhan. And now, ladies and gentlemen, we commence with the panel discussions. May I request the dignitaries to kindly take their seats in the audience. The first panel, Banking Transformation, Bank CEO panel, would be emphasizing on AI-driven operational efficiency in banks, balancing AI innovation with regulatory oversight, tech stacks, technology modernization, and core banking transformation, digital initiatives being taken by banks, governance and evolving role of bank boards in balancing risk and innovation, and talent transformation initiatives in the next decade. So the next session, I just repeat, ladies and gentlemen, because quite a number of people were outside who have come in now. So I'll just repeat what the panel is about. The first panel, that is the Banking Transformation Bank CEO panel, would be emphasizing on AI-driven operational efficiency in banks, balancing AI innovation with regulatory oversight, tech stacks, technology modernization, and core banking transformation, digital initiatives being taken by banks, governance and evolving role of bank boards in balancing risk and innovation, and talent transformation initiatives in the next decade. It is my proud privilege to invite the moderator of the session, Mr. P.D. Singh, Co-Chairman Banking, NBFC and Finance Committee, IMC, and CEO, India and South Asia, Standard Chartered Bank, onto the dais. The esteemed panelists who would be joining the moderator in this session are Mr. K. Balasubramanian, CEO, India and Subcluster Head for South Asia Citibank, Mr. Kiran Shetty, CEO and Regional Head, SWIFT, India and South Asia, and Mr. Sanjay Singh, CEO and Head of Territory, BNP Paribas, India. May I request all to kindly take their seats on the dais. Thank you for being so quick. The session is all yours, Mr. Singh, till 5:50 p.m.
Thank you. So you can give us a reminder if you're going over time.
Sure.
Wonderful to be here this evening. I was looking at the audience and there are many hundreds of years of experience of banking, finance, insurance, NBFC in the audience. and happy to say about 100 years in front of you as well. So all the young bankers here, collectively we have about 100 years of experience. But in the best of times and the worst of times, and probably that's the way I can describe what's currently happening. So I will be remiss in my duties here as the moderator today if we don't talk about what's happening in the world today. We'll probably spend a minute each on how we see things panning out in the future, and then get to the core and the meat of the subject. But before that, let me introduce our esteemed panelists for today. So we have a very popular A. Balasubramanian. He's been a banking stalwart for 3 decades. Spent most of his banking career in Citibank, apart from a brief prelude to HDFC Bank. Prior to taking on this role, which he took on in April of 2025, he was the Asia South head for the corporate banking based in Singapore, and looked after the entire corporate client franchise for ASEAN and South Asia. Amazing to have you, Bala. We also have another stalwart in banking, Sanjay Singh. Sanjay has been at the forefront of BNP for a number of years now, first as CEO since 2021, and then as the head of territory since the Jan of 2023. So this includes the entire operations of BNP in India, which includes the GDCs, Bangalore, Chennai, Mumbai, as well as Sher Khan. In terms of his career background, he's an expert on Forex. He's the only guy I call when I want to know when rupee will hit 100. But he's not going to tell us about that today. Prior to that, he was with Credit Suisse. He was at CLSA and also at Standard Chartered Bank. We have with us also our very own Kiran Shetty. Kiran has been the CEO for a decade now, Kiran, is that right? And an integral part of banking in India is the loudest voice we have in promoting banking and finance in the country today. Thank you, Kiran, for being here with us. As we heard earlier, he was earlier with G Capital and Western Union, and knew our chief guest this evening really well, because a decade ago he'd built an entire network of, I don't know, how many thousand did you say? 50,000 locations to be connected through India Post. So amazing achievement, Kiran, and thank you for being here with us today as well. So as I promised, maybe we'll spend a minute each on what the world looks like and from a bank and banker's perspective, and then we can get on to the meat of the matter. So over to you, Bala.
Thanks, Benny. Welcome, everyone. It's a privilege to be here in front of all of you. I'm actually back from New York over the weekend. For 2 weeks, I was out in New York. And, we are, and when I say we are actually talking about the whole world in a very, very volatile situation. Many of you would be aware that, Donald Rumsfeld, way back in 1990, talked about a VUCA world. And frankly, the last 12, 15 months, ever since we have the new presidency of Trump, it's been a continuous one-way VUCA world. And the unfortunate part is that, at this point in time, there are events that is happening, which is completely outside our control, but the impact is totally on us. And PD talked about when rupee is going to hit 100. People are basically talking about what's going to happen to the rupee, what's going to happen to the crude, what's happening to the stock market, why is it that, FIs are pulling money out of the country. So there are just too many whys. And frankly, there are not many people who are able to give an answer in terms of when and how. I think that's a puzzle that, many of us in this room would also be going through on a daily basis in our organization. And the question then is how do you address this? Now, frankly, if I look at India compared to many other parts of the world, I know that, there are near-term headwinds and we all will get impacted in some form or the other. But the structural and the fundamental story continues to be strong. And the investors, though, have taken fancies to some of the other Asian markets, and AI is a big theme that is playing out in terms of new capital allocation across the world. And I think that's one of the reasons why India is not getting too much of capital. But overall, I think the sentiment on India is still not that negative. Some of the long-only funds are still putting money into the country. maybe the fresh allocations to the extent that we were aware of in the last 10 years is not happening. But it's again not a big exodus that is happening. A lot of the money that is going out is from hedge funds and people who are looking at opportunistic trades. But overall, I think the sentiment continues to be muted. But I would still be on the tent that we just have to probably pull it through over the next quarter or two. And I'm still hoping that there is going to be a solution to the war sooner than later. At which point in time that things should hopefully start showing up in a positive way.
Wonderful. Anjay.
Thanks, PD. And I think Bala has said all. Not much left, but I'll just summarize few of things. One is truth is that we are in very uncertain environment. That's a reality. And many reasons which is debatable, but that's the reality. Once I'll talk about the one is equity market. Equity market, what is happening in recent past when you see FIs continuous selling and India domestic is supporting it because of the retail money going to the mutual fund. But where FI monies are going, FI monies are chasing nowadays most of the AI driven stock markets, most of the smart money. If you see, first they started with America, then they saw that valuation is very high, then they start looking at South Korea and then Taiwan. So they are going there. India is a very diversified equity market, our indices, which is as of now for them is not much value. Same time, we of course is struggling to get the FDI money for long. That is again another direct or indirect impact to our forex reserves. Crude is playing very key role in this uncertain geopolitical environment. And as we all know, India is heavily dependent on crude import. So that is playing pretty negative for us. And hence again, ultimately impact on the currency as well, depreciating currency of that. So in all, it's an uncertain environment. But I'm a very optimistic person in my life, in general. And my view, when we see these kind of uncertainties, and today if you ask anyone view for tomorrow, they'll say, no, please check with what Trump is doing tomorrow, rather to saying the view. So then it's in this kind of environment, eventually, yes, I think it's not going to last forever. Another few months or few quarters, but eventually things will back to the normal. That's what my view.
Thank you, Sanjay. And remember, I didn't ask you $1 million question.
Yes.
When do we get to 100? But anyway, we'll save that for later. Kiran, your views.
It's first of all, it's such a privilege to be with all of you today. Thank you so much, IMC, for having me. It's very difficult to speak after Bala and Sanjay because you got all the insights from a banker's lens. You will hear from me more as a citizen, as a person that supports them as vendor. There are two perspectives that I have. One, I think nobody can afford the war beyond a certain point. And I think we are reaching that point. That's my personal opinion. The second perspective is this, and which is very optimistic, is the fact that from 1947 to now, we are a $4.2 trillion economy. And in the next 7 to 8 years, we are going to be a $7.5 trillion economy, virtually doubling the size of our economy. So we should not be looking at what's happening now, but planning for how we will tap into the growth that's coming. And I think that's the real story for us. I'm very, very optimistic as I'm looking into the next few years. And I think the pain is short term, but like Sanjay said, nobody can predict. But optimistic future, PD. That's all that I can say.
Thank you, Kiran. I think fascinating insights from three of our panelists. To add to that and to also add to the Indian story, I think no one can stop us. We are already Asia's largest rail network, the world's largest road network. We already have the third largest metro network in the world, though we started building recently. We have 425 million people who fly by air. We have 1,000 aircrafts that have been ordered. So irrespective of what's happening in the world, I think when things get a little more normal, there is no other place to come to than to this great nation. But if you ask me the rest of the questions, I would simply say, given the number of uncertainties, it's out of my syllabus. So getting back to the syllabus, which is on AI. So first question to you, Bala. AI promises significant efficiency gains in banking. But where is this in banks' operations? Is it truly impactful? Is it transformational versus incremental? Your thoughts?
Yeah, the way, PD, and this is very topical today, the way I will address this is post city globally, post city in India, and what is in it for India? Because I think there are multiple facets to this AI question. Clearly, I think our industry, which is the BFSI industry, is one that is going to get impacted quite significantly, and I'm saying in a positive sense, with the AI adoption. One, it is going to make us super efficient and effective. The turnaround times are going to be much faster, and the error rates, which is very, very critical in the industries, is actually going to be much better as people start using and adopting AI in their day-to-day activities. Now, in our shared service center, which is what we call as CSIPL, City has close to 35,000 people working in 5 locations in India, and they support operations for around 65 countries globally. And our global CEO is actually driving adoption of AI. And as you can imagine, a large part of the adoption is actually being piloted in India. In fact, 70% of our staff working in CSC, they carry patents, they carry IPs in terms of processes that they have developed across many small operations. So I think this is no more conceptual, this is real in terms of adoption and applicability. And if I have to just give you some examples in terms of areas where you have started using AI, one is in operations on the services side, especially on customer facing services. I think AI does a phenomenal job in terms of the speed of engagement as well as ability to turn around solutions to customer queries. So I think that is a big positive trend that we are seeing. The second thing where we are using AI quite extensively is on the underwriting side, especially on credit documents, etc., where a large amount of data needs to be collected from multiple sources on companies, on industry, on growth trends, etc. I think AI does a much better and faster job than humans involved. The third thing that we use quite effectively is on the credit cards. We exited the retail business, but we still have credit cards on the corporate side. And whenever there is query mechanism or any aspects around the credit card, I think there again, there is a bunch of activity that we're doing on the AI side. The other bit is on markets business, and in terms of trade confirmation, in terms of interest calculation, in terms of optimization of portfolio, etc. We are starting to use AI quite extensively with some of the sophisticated clients to try and see in terms of how we can try and mirror the risk management that they are carrying inherently in their business, and how are some inherent risks that is not visible, but which potentially can create vulnerabilities in terms of their exposures. So I think there is multiple ways in which AI is getting adopted in the banking system, not only in the world, but even in India.
Thank you, Bala. Resonates with the earlier session when Mr. Sachendranath was talking about Mr. India who can become invisible and do a number of things behind the scenes. Sanjay, automation drives a lot of cost saving. How does that impact bankers and banking?
So, PD, frankly speaking, my view here, automation of course takes a lot of cost saving, but we also need to debate is automation, is here we are talking about the cost saving or we are talking about the value creation. And particularly AI, I would say initial stage is value creation. Increase the productivity, increase the adaptability, and reduce the error. These are the more important than first as the cost saving. And then we look for the, when you start talking about the whether it's really in the, it's a AI, is how much investment that need. Generally, AI in the beginning need a lot of investment. Cost saving come gradually later, because it will increase the productivity and eventually it will start doing the cost saving, and then it will pass it to the customer. For simple example, not AI, but automation or other things, if we all remember 25 years back, equity market, where physical settlement, brokerage charges was almost 1% or more than 1%. And then automation came and everything started having electronic. Today, execution cost is as good as zero. So that's what the it's going to bring gradually cost saving rather than the upfront, and that's where my view. But my view, what we see many of the people is very much fear about the AI. I would say it's do not be afraid, rather embrace it and get along. Yeah.
No, fantastic. I think the example you gave is quite relevant, especially when any cost saving needs to be plowed back for further enhancement of efficiency, and ultimately all impacts the customer as well.
Exactly.
Kiran, I'm going to ask you a question on Gift City. Gift City has become the hub for India's cross-border payments, and SWIFT plays a very important role in cross-border payments across the world, definitely in India as well. But what's the specific perspective that you can give us connected to Gift City in this aspect?
So, and PD, thanks for your question. If you look at SWIFT, and for the benefit of the larger group here, we are a company that's owned by all the banks in the world, and our agenda is led by the banks. So the basic agenda for us is to make them talk to each other in a structured, in a structured manner. And whatever we earn is given back to the banks in dividends. Now, every third day, the value of world GDP flows through our platform, so which essentially means that we are connected in 212 countries across 11,500 institutions. So when India has an ambition like Gift City and is competing with Dubai, Singapore, London, we are able to plug them into the ecosystem and get them the same players that are playing in those markets. And I think that's a great advantage that we bring on the table for accelerating the growth of Gift City. The second important piece, and which is new, is innovation. We are also able to interoperate. So today, the world is moving into different currencies. We have fiat currencies, we have central bank digital currencies, we have tokenized currencies like USDT and others. So we are able to interoperate a fiat currency with a token money, and that will enable the innovation that Gift City is seeking to accelerate their play in the global market. And I think that's the second powerful piece that we bring on the table. We're very excited of the initiatives that are already being taken, including by your bank, PD, and we are there to support further growth. I'm personally very excited that Gift City is doing exceptionally well.
Quite fascinating. If we can tokenize stuff and Gift City can get ahead, I think that it can be a real game changer.
Absolutely.
For India as well. Bala, let me come to you now. In terms of banks do a lot of stuff on their own. They also outsource a lot of stuff. So what do you think the banks can confidently outsource, and what should they probably stop doing themselves?
I think we were pioneers as a country in terms of using outsourcing. First, we were the support providers for global banks, where the likes of a lot of our IT companies were doing outsourcing work. And eventually, if you think about it, even the Indian banks have evolved in that space. Now, there are multiple benefits and advantages of outsourcing. And frankly, today, people don't look at outsourcing as a risk. They actually look at outsourcing as an extension of their business operations, both from a cost perspective as well as from an efficiency perspective. And there are clearly adopted models of areas or operations where outsourcing has become more of a norm. And I can think about IT applications. Frankly, like, why do you need to have an IT application in your own office, except for some of those critical bits where a bulk of the stuff you can actually outsource and get the job done at a much more cost-effective manner than doing it out of your own operation. So that's a very well accepted thing. The second thing I would say is that, FinTech partnership. Now, the amount of digital expectation that our clients have in India has just been going quite enormously. And for any large regulated organizations like a bank, for us to get anything approved, it takes a hell of a lot of time in terms of approvals across multiple layers of bureaucracy. Whereas a FinTech is very nimble and agile, and they are basically ready to find a solution which could absolutely be to the customer's requirement. Then the question is, do you go through, do you actually go through creating all these internal bureaucracies and trying to find a solution, or partner with the FinTech to provide a solution which can be much faster to the client's requirement? And I think increasingly what we see is banks are using FinTech partnership from an outsourcing perspective, where they are able to meet the client requirements, and they really don't see them as a competition, because the strength of a FinTech and the strength of a bank is very different. The clients also see value in terms of doing this co-creation between a bank and a FinTech. The last thing I would say is that, today again, with cloud becoming so common and ability to provide or keep your data not necessarily in your servers but in a cloud becomes much, much more acceptable. The question then is how do you partner with some of those providers, be it in India or globally, in terms of creating capacity for storing data. And as you know, data is like oil, and the amount of data that a bank generates on a daily basis, the infrastructure that is required and the investment that is required is going to be quite humongous if you have to create everything on your own. So again, outsourcing works in a great manner. So I think overall, if you think about it, as an industry, we are quite open to outsourcing. And the good thing is even regulators are quite well aware, and they are very clear that as long as you have control governance over the functions that you're outsourcing, we are quite open to exploring that as an option. Of course, when you choose a partner for outsourcing, you have to be very comfortable with the credibility, with the scalability, and the fact that they are not using any shortcut options to achieve an objective, which eventually will land you also into trouble in future if there is a blowout that happens. But I think there are several good vendors that is available in the market, and this could be across multiple streams where banks are very comfortable outsourcing.
No, thank you, Bala. I think a number of us, like you mentioned earlier, also have our own entities that we outsource to, which then become global centers of excellence, and almost every function globally is now outsourced to India. So there are a large number of people working in these amongst just the 3-4 banks that we know about. Here again, I think some of the constraints of outsourcing from India, within India, to our own entities, like you rightly said, is also restricted by regulators. So while the globe probably outsources a lot of stuff to these entities in India, some of these we have to be mindful of the regulatory constraints. Sanjay, coming to you. In an AI world, there are many roles that in banking that are being disrupted. And there are many transformations that are happening, which you are also witnessing. Would you like to share anything about this with our audience today?
So, it's a very, very hot topic nowadays, not only in the banking sector, across, for the survival of the many people. I would say, coming days or coming year, it should not be, or it will not be man versus machine. It should be man with machine. And on transformation, I'd say, of course, AI will replicate a lot of the jobs, which is repetitive job. Start from the analyst who just like data crunching or dropping the notes. These will be definitely the first getting attack. But bigger worry is, as we all have our GCC center as well. So bigger worry, as Bala was of course explaining about the outsourcing as well. If we'll say IT outsourcing, GCC, all of them together, if we'll talk about the data, roughly around 7 million employee they absorb today. And on an average, roughly around $350 billion revenue annually they make it. So if I count it, 7 million of the total in India population working force is less than 1%. And 350 billion out of the total our GDP 4.5 trillion is little 8 or 8.5%. It is significant. So that is definitely the worry. But are we seeing on the other side of the benefit of this when AI is coming? Because suppose if AI is coming, of course, as I said earlier, it will increase the productivity and efficiency, free up a lot of quality time for all of us. But what about the job creation? When AI is coming, they need a lot of the data. And as we all read in the newspaper, one of the biggest or many of the biggest global investors, they already started investing in the data center in India. So when they invest the data center, that of course create the job. Data centers need a lot of the energy. They have to go for their captive power plant, definitely a lot of the renewable energies, all those. So in reality, this kind of transition, one opportunity creates the other. So when AI is going to bring it all these and going to reduce the job for the most of the lower level job, but same time it will create the another skilled worker job for on these areas. So yes, it is a challenging time. We all need to be more agile and looking at the advantage, how we can make it. And in the banking world, if I'll mention how we are doing it, we are trying to take this challenge to particularly our employee, to get them the ongoing training, which we all are doing. We all know LLM, how it works. Even I use a lot of AI myself, that one. So that's where we do it. And also very important to know, which is, I'm just trying to quote one example. Historically, if you look at last 30, 40 years, whenever these kind of revolution happens, if you start from the 1980s computerization, or even dot-com era, or recently, which none of us forgot about, the COVID, question marks comes of the human survival. But human are generally, they always find the ways to survive better of all these kind of the challenges. And my view, we'll also again survive with this AI thing and look at the better future rather than getting too much afraid of it. My view, it's better. If I'll put it again, PD, sorry to taking a few more minutes. It's any growth economy. Yeah, earlier we used to have it like you need a capital, then you need manufacturing, and then you need service. AI is bringing fourth dimension in that intelligent. So here, and human is having the EQ, and AI is bringing intelligent. So my view, we should look at how intelligent and EQ work together to make the better future.
Sanjay, that's a very optimistic note. Thank you for that. I think a new dimension, which is exactly the way we should look at AI. In fact, when you read equity reports, barring the last paragraph, I think the rest is all done by AI, and I know many institutions do that because it's just an elevator analysis of what went up and what went down. The same I see in banks with probably credit notes, where publicly available information is just used to provide the basic information, and the real analysis bit is only a small bit done by the human at the end, again probably assisted by 3 options that the AI gives, and you choose one. And that, in fact, if you recall, I read in the newspaper an embarrassing incident where one of the big fours actually had to withdraw a report that was generated presumably by AI and had probably the wrong output come out to it. But those are the perils of doing this. Kiran, Swift has been looking at doing things faster, more efficiently, with less friction, in a more predictable manner on a cross-border basis. Some of this innovation and the seamless ways in which your existing systems are operating, how do you achieve this without increasing complexity? I think all of our fear now is that the complexity in the world increases a lot because everyone has this tool and everyone has the same information. So the complexity actually has gone up, it has not gone down.
That's a great question, PD. So what we did is that we had a proprietary data standard till last year, which was called MT standard. We went into an open standard environment, which is ISO, and we graduated 212 countries across the globe to the same standard, which is much richer data that enables data mining and everything else. Now, we are, in your question, we are addressing 2 problems. One, we are trying to accelerate speed. Imagine this. If the GDP is 4 trillion, 30% of it is coming as trade into India. If that money can get credited the same day instead of being credited after 2-3 days, the economic activity, economic acceleration gets faster. So the first problem that we are solving for is why is the information reaching the border in less than a minute but not getting credited within the same day? And there are some challenges like, you have capital control challenges, identifying the purpose of remittances and all of that. So we are working very closely with the regulator to solve some of those frictions and get them standardized. So I'm very confident, and in fact, a regulator has issued a guidelines to the banking community to make some of these changes and implement them by October. So India would have a much faster same-day kind of a credit mechanism starting October this year. Now, coming to your big question in terms of how do we ensure that banks can innovate on top of the same infrastructure rather than investing new dollars, because then you're creating islands of technology that don't talk to each other. So our philosophy has been that how do we interoperate one technology with another? So for example, we have collaborated with Chainlink, which is an Oracle proprietary product, which can convert a message that we generate into a blockchain message and make it talk to the blockchain world. With the rich data standard and already available infrastructure, by just plugging in, it's able to evolve that into a blockchain mechanism. And nobody is investing additional dollars, and they are able to get the best of new technology that's evolving. So that's really been our focus. And we've been fairly successful in proving the concept, and now slowly it's getting into production. So I can promise two things. One, India will get faster remittances, which will probably get credited within the same day. While SWIFT is able to reach the country within few minutes, the processes are refined, right? And the second piece is that we are fully ready now to interoperate any technology without our partners, which is the banks across the world, making any changes to the back end.
Fascinating, as long as there's money coming in only. Thank you, Kiran. So, Bala, back to you. Banking and financial services is now competing with the best hirers in the world. How do we get the talent we want against this kind of a scenario?
For some of us who have been in this industry for more than 3 decades, we have seen this trend across several periods of time, right? I remember when I was passing out and going through the job process, the consumer companies were the biggest competition to financial industry. And then the trend reversed in late 90s, early 2000. .com became a very big thing. Everyone wanted to get into .com. And then things moved, and consulting became a big favor in the market. And now, of course, the IT in terms of AI and all those high-tech companies are but then one thing which is always constant is that financial services has its own charm, and at different points in time, you see adaptability on financial services. Now, if I have to look at ability to acquire talent, the attrition rate of the talent, and more importantly, ability to retain talent, I think these are all important and interesting puzzle that our human resources department as well as several of our seniors involved are completely focused on. And if I think about it today, the attrition rates were very high in the period around pandemic. We saw attrition rates touching actually early double digit, which is very high for a mature industry like financial services. But again, fast forward today, I think we are down to the mid single digit, which is, I think, quite good in an emerging market like India for the financial services industry. Ability to retain and attract talent, we are still, and I can talk about a lot of the financial services industry, which goes and hires from the best of the institutes in the market, we still continue to be day zero or day one. The type of businesses and the type of opportunities that people are interested in may differ, but ability to get a day zero or a day one placement in any of the top institutes in the country, I think most banks still retain that capability. So I think it's always a struggle for talent, but as long as you have a very strong brand, you have a core ethos in terms of what you have as a delivery, then I think you will still be able to attract and retain talent.
Thank you, Bala. I think just to add to that, the government's incentive on the apprenticeship scheme, if applied properly in the BFSI sector, and I look at the whole sector, all the constituents of it, I think give us a look-in period into young talent and then they self-select themselves and stay on for a longer period for a permanent job as well. These are for undergraduates.
Actually, that's a very good point that PD is bringing out, because one thing that we have noticed since the pandemic is that people who come in for their summer internship or industrial training, I would say that the conversion rate for them to get a PPO is anywhere between 60 to 70%. That's a very, very high percentage, which then means that you have an early look into the talent that you want to hire. You have the ability and flexibility to provide a PPO to that person, and that person also knows the firm in which he or she is going to join. So it's basically a courtship that happens before even eventually the marriage happening. I think that is working out very well. That's a very good point.
Sanjay, I'm going to ask you a little difficult question, right? So how do you bring employees along during the transition in a world that is now increasingly AI? Or is it a threat, an opportunity, and how do you convince your employees to follow that path? All of us have a lot of AI enabled now, but not many of us use it, to be honest.
Agree. I agree, PD. In fact, what I see nowadays, I use a lot AI, to be disclosure. I use a lot my day-to-day, including in office, PC, everywhere. And we promote also LLM. But I'm not, my view is here, people are not afraid of AI. People are afraid of being irrelevant. That's where they are more afraid. And just to put an example, post-COVID, one new terminology started daily in our life called hybrid, which means when you say, oh, you do hybrid working environment, they say, yeah, hybrid means work from home and work from office. I think it's going to change very soon definition of hybrid. It will become hybrid means men working with AI agent will call it hybrid, and men will not use the AI, they will be the non-hybrid. So that's where new terminology are going to work. So to explain your question, PD, we do try to educate to the people how, as I said earlier, embrace AI. It's need of an hour. We have to take it. We can't live without it. So then we have to take it. In fact, if I remember recently, Jensen Huang, who is NVIDIA's founder and CEO, one of the his college graduation ceremony he mentioned, and he said, "We all are standing on a starting line. Don't walk, run." So basically, yes, we all have to chase it. One very funny article I was reading. It was a little bit put in the fun way recently. Just like I was in the flight and I was reading it. Someone wrote it. Most of the investment banker nowadays using AI to prepare the pitch book. More or less, everyone is going to use the same. So AI will prepare the pitch book for everybody. Same time, corporates who's going to evaluate those pitch book, they're also using AI to evaluate the pitch book. So basically here, what basis they will select. So eventually, as I said earlier, EQ or human relationship come in picture, where the senior level you have the relationship and they know you will stand for it, and that basis you'll get it. Because if it's all depends like whose AI is better. It may not be the huge difference, very minor difference. So that's where we are moving. So it's very uncertain time. But as I said multiple times today, let's embrace it, take it together, accept it, don't deny, and move forward.
You're spot on, actually. If everybody uses the same thing, then we're all the same apples in the same tray, right? But if I can just add to what you just mentioned about embracing AI and encouraging people to use it better, there's nothing better than show and tell. And I can share a personal incident with you that happened about 6 months ago, where I read out an entire speech, which was very well taken, to a bunch of young interns in our institution. And then I asked them, can you give me feedback on this speech? And they gave me whatever. So I said, by the way, this is all written by AI. My real speech is yet to start. And if you guys haven't even figured out that yet, then you know you're dead before you started. So I think that's the only way to push people to say that it's the new normal, it's the new baseline, and then you need to build over that, like in your pitch book? What is the incremental add that you can do to that pitch book is what's most important. Kiran, you spoke a lot about, frictionless payments, was money coming into India, which is very important for us now. But in the new geopolitics, in the way the regulatory pressure mounts, how do you handle that? And what is your input and advice to the audience today as to what to expect in the future on this aspect? Because this is becoming a little more unpredictable on the regulatory as well as the geopolitics side.
Thank you, PD. I'll make an attempt beyond my pay grade to actually look at that problem, but will try my best. So for me, I think the way I look at this is that you have, traditionally we look at this as a people problem, trying to analyze what's happening. And with all that Sanjay said, Bala said, and earlier in our discussions, we spoke about AI becoming more relevant. I think we need to make it a data problem in terms of analyzing trends and patterns. And the other thing I will say is that we need to move our decision making on these patterns to real time. If we are able to make data-led decisions in real time, I think the entire world will be better prepared to take decisions, address concerns and challenges in their businesses and succeed. So that's how I would look at it.
Thank you. Thanks, Kiran. We've come to the end of all the formal questions that I had prepared for. I'm going to ask probably the audience a few questions rather than them ask us questions. So the first one, in one word, if anyone can tell me AI in banking or BFSI, is it hype, help or hazard?
That's right.
Well, I'm going to give an obvious answer. It certainly is not hype. Maybe 3 years ago it was hype. Today it's absolutely real. Let's look at it in two ways. One is the customer facing side and the back end. On the back end, a lot has happened, but we are not able to see. On the front end, a huge changes have happened, but some people have done it very badly. When I say badly, I mean there was a time people understood customers very well through relationships and were able to use their judgment to make very good decisions. When you delegate that to rule-based AI, it forgets the essence of it. Because after all, what does AI do? It commoditizes knowledge. But what it cannot do is understand trust, understand context extremely well. It's not able to humanize things. And the front-end humanization is extremely important, especially when you're dealing with corporate stuff. So, yes, it's not a hype at all, but there's some work to be done. And you mentioned this right in the beginning, on the customer-facing side. There's a lot of possibilities for using AI, and it's being done, right from queries to complaints, by having tickets issued and it goes all the way and comes back. But use AI to remove friction, not to remove humanity.
Very well said. Thank you. Thanks for sharing with us. I have one controversial question. So one practice we should retire as an industry because it wastes time, but we still insist on doing it. And it can't be KYC because that is regulatory.
But really too much of
anyone?
KYC goes on.
While you think about that, let me throw another question at you, right? And my panelists, please answer if you think you have the answers as well. I don't really. So one bold bet that you would be willing to make now in the industry, in the banking industry. So we have a lot of bankers here and we also have a lot of people who know more about banking than the bankers do. So one bold step that we would be willing to make in banking. And also, what is the one that we should not?
No, in the current situation, any aggressiveness should not be done. It should be measurable risk management, and we should know the impact much in advance, and accordingly we should take the forward steps. But I don't say that we should be static. It should be dynamic. So that as far as the any grand move, that I think I have always passionate about one concept called big, hairy, audacious goals. So that is in the big book, Built to Last. So one area, somebody said, city never sleeps, long back. Same way man landed on the moon. So in this next up to 2047, in the real sense of big, hairy, audacious goal, along with the not aggressiveness, but we have to take a bold move. It can be related to resource mobilization, it can be related to credit, or it can be related to human development, along with the technological development.
Thank you, sir. Thank you. Very insightful. So one last question to my panelists. 2030, how would banking look to you? Anyone would like to take that?
Sorry, repeat the question. 2030.
5 years from now, how would banking look like?
So, PD, you and I in the industry for long. As I said earlier, every revolution people say first banking should close. We don't need banking, right? But it's still there. Form changes. And in fact, many of us in the room, I don't know when last time you went to your own branch where you have a bank account. But yes, it's still functioning and all. So I'm not seeing it's going to change drastically. One thing could happen, as we're discussing today at the topic of AI, all of us, if we'll be there, our productivity will increase from here.
Fantastic. Any more? I won't force anyone to say anything.
I would expect to see more agentic AI in the banking, which will probably handle queries and customer service at a different level. So that's something that I expect to see by 2030.
So by 2030, I hope we will allow AI deeper into banking, because we currently, it's like the Russian dolls which are nested. We've just probably removed the first or the second layer, and we're not willing to let AI go deeper because we don't know what it can do to your money and mine. So we'd rather keep it at the periphery, use all the efficiency stuff, not really use it for the core of banking. We can take the data out, like Bala had mentioned, use that data layer, but probably in 5 or 7 years, we will be able to have the courage to allow it to go deeper into, but that is a prophecy. Let's see where it goes. But thank you.
But PD, just to add that one, as you said, 15 years back, we were very skeptical do the online transfer. We are happy to write the check, go to ATM, withdraw the money. Now 99% of our transactions is online transfer. That's again the same. So it will adopt it.
I'm quite sure something will change in the mind.
2030, you'll not see the credit cards and debit cards in your wallet.
You're probably quite right.
That's already not there in China.
It's been a fascinating conversation. Thank you to my panelists. I, for one, learned a lot. I hope it was enjoyable for you as well. Thank you.
Thank you, sir, for being on time, and all the panelists for a fascinating deep dive into transformations and initiatives in banking and financial sector. May I now request Mr. P.D. Singh to present a memento to our panelists as a token of our appreciation and gratitude. Mr. K. Balasubramanian, CEO India and Subcluster Head for South Asia Citibank. A loud round of applause, ladies and gentlemen. It was a very, very interesting, transformative panel. Mr. Kiran Shetty, CEO and Regional Head, Swift India and South Asia. And Mr. Sanjay Singh, CEO and Head of Territory, BNP Paribas India. May I request Mrs. Sunita Ramnathkar, President IMC, to present a memento to Mr. P.D. Singh as a token of our appreciation and gratitude.
Thank you so much.
May I request all the dignitaries to come together for a group photo? Delegates, kindly note again, the complete speaker profiles and the detailed conference agenda can be conveniently accessed and downloaded by scanning the QR code located on the reverse side of the delegate badges. Thank you, panelists, and thank you, sir. Our next session is on digital lending, balancing inclusion and responsible credit, NBFC CEO panel. The discussions would concentrate on AI credit models versus traditional credit underwriting, managing risk and bias in AI models, regulatory oversight for AI-driven lending, embedded lending in commerce platforms, co-lending models with banks, fraud, KYC, and compliance challenges. To moderate this interesting session, I'm honored to invite Mrs. Pooja Bharwani, President, Investment Banking and Head, BFSI and Tech Investment Banking, Elara Capital India Private Limited, onto the dais. The elite panelists joining her in this session are Mr. Anuj Pandey, Chief Executive Officer, Inaugural Capital, Ms. Hani Jalan, President, Investment Banking and Credit Solutions, Trust Group, Ms. Swati Agrawal, CEO, Advisory, Care Analytics and Advisory Private Limited, CAAPL, Ms. Tripti Navani, Chief Operating Officer, Shapurji Palanji Finance Private Limited. May I request all to join us on the dais? And the next session is all yours, Mrs. Bharwani, till 6:40 p.m. May I request all the dignitaries to take their seats? Thank you.
Hello? Yeah, I think. Yeah, thank you. So after that banking panel, I guess people have stepped out, and hopefully they'll make their way back in. So this, we are going to be speaking about NBFCs and the NBFC landscape. Just want to set the stage a little bit in terms of NBFCs. The assets under management today are roughly around 50 trillion as of FY25, expected to go to 70 trillion by FY27. So massive growth there. Everybody before us has spoken about Viksit Bharat, the vision, the 30 trillion. So I won't go into that in detail again. But what I want to point out is the NBFC role in the Viksit Bharat economy of 2047. India, and there is many research reports out there, India would need to sustain nominal GDP of approximately 10 to 12% to get to Viksit Bharat. And the pace of growth of the NBFC sector would have to be approximately 1.5 to 2x times of nominal GDP to be able to get us to the volumes at which we need to be at Viksit Bharat. I think one of the earlier panelists alluded that credit also needs to be a big factor that we need to factor in as a percentage of GDP to be able to get us to where we want to be. And NBFCs have a key role to play. Like with the banking sector, so there are two prongs to Viksit Bharat. One is the banking sector will provide the volumes, but the NBFC sector provides the reach. So with that context, I would like to throw open this to our panelists, and we'll be discussing a bunch of topics, the most topical being AI. So we'll start with that and then get into some of the other challenges that NBFCs today are facing. I'll throw it open to Anuj. Anuj, you are looking at one of the biggest prongs in terms of Viksit Bharat, which is the missing middle, the MSME funding. From an AI perspective, there's a lot spoken in terms of AI underwriting to be able to get to the MSME and penetrate a little deeper. Where are you seeing alternative data providing a lot of underwriting ability? Are you seeing deeper underwriting? Are you seeing more wide underwriting in terms of getting to more new to credit borrowers? How are you looking at AI from an underwriting standpoint?
Thank you, Pooja, and good evening, everyone. So, while you also said, in terms of, just to give everyone a broad perspective, from credit growth perspective, AI's application, if you divide them in BFSI, in banking, primarily the lowest hanging fruit is backend. In NBFCs, the lower hanging fruit is the front end. Because we, as NBFCs, we are the last mile providers. In that context, there are so many ways it has already changed and constantly changing the way NBFCs are working. I'll give you one example to set the context. When you lend to micro SME, one of the tougher problem to solve is how to underwrite the cash. And there is this big animal which exists in underwriting to MSMEs, which is called touch and feel underwriting. And it has been that way for a long time. That is something which is dependent on the credit manager who is going to visit that MSME and his understanding and the context. In that, it is perhaps the most apt to apply AI and put some method to madness. So already so many NBFCs are exploring areas where this can get templatized. So when you meet the customer, if you are able to record and transcribe and whatever you are observing, you take photographs and then put them back in context in terms of database perspective and then apply AI, the whole credit decisioning in terms from touch and feel can move to a more scientific basis. So that is perhaps one example of how things are changing. There are so many others. And it starts primarily, and as the previous panel, a lot of people were speaking, it has to start by when you lead by example. One of the problem areas, especially for large NBFCs with large workforces, is the fear in the front-end teams that their jobs will be lost. So it is very important for us to take it slow, help them understand how it is going to assist them, be better underwriters, and then move forward. In back-end operations, in how you are able to cross-sell to customers. There are so many ways in which already NBFCs are working. We'll talk more about that, but on the whole, on the last mile implementation, there is super opportunity.
Thank you, Anuj. Just if I could add just one more question to that. From an AI perspective, what kind of alternative data or what AI solutions, say in the last just 1.5 years, have you found to be truly fruitful in terms of assessing MSMEs, which was not present before?
So the real cash flow analysis is always a difficult thing. So people rely on, so about 2 generations back, people were relying on bureau and the repayment history. Then bank statements came in as it got more digitized. For an MSME, the best cash flow statement is the bank statement. You add to that GST and the 3 combined would give you a very accurate estimate of cash flows. But in the new generation, especially for small retailer lending, we are finding that the daily transaction flows which are now available, if analyzed through machine learning primarily and little bit of AI, will completely change the way you lend. So this is probably the biggest area.
Okay. Thank you, Anuj. I'll move to Tripti. Tripti, you look over operations at Shapoorji Pallonji NBFC. What is, if I can ask you, what is the biggest impact of AI from an operational standpoint? So, while Anuj spoke about underwriting, and that's the front end, from an operational perspective, where are you seeing, AI could add a lot of value? If you want to even talk a little bit about underwriting that you guys are doing with AI, that's also fine.
So AI for us at SPFPL, we are kind of we have a top-down approach when it comes to the training part of it. In the organization, everybody is kind of going through some or the other kind of AI trainings. Everybody is updating themselves and stuff, and we know that AI has become very, very important even in BFSI because it's making everybody's life easy. Earlier, a particular credit note and the touch points, you would manually end up kind of looking at financials. You would look at doing a particular call, look at the corporate data, and keep kind of getting more and more data, and that would go on for days. Right now, with data being very, very important for the scale of operations that we are running, and we are more in the space of supply chain finance, wherein the touch points that AI is kind of helping us get through, it's become like a very good decision layer for us. It helps us kind of take the right kind of decisions in and very, very swiftly and very, very accurately as well. So earlier it would take around almost a lot of time. Now it's taking around 2 hours, 3 hours to kind of get all of that particular data, from GST data to financials to everything. So all the touch points which are there for the analysis, everything is kind of come up very, very easily for us. And in the operations as well, taking care of how much repayments have kind of come in. Are they on in a timely manner or no? And how many cycles have those particular loans really run internally for us? Have there been any delays? Have there been any kind of news which has kind of come in, or for a particular promoter, for a particular company, or any good news, bad news, whatever is there? All of that is there literally on our fingertips, and decision has become easier. Human in the loop will never ever go out. RBI also is talking that technology has to be as humans we have to be accountable. So that's where human in the loop is something that we are going to be having through and through.
So it has added a lot of value, but like the previous panel said,
yes,
there has to be a little bit of that EQ component and that last paragraph that needs to be vetted by a human, right?
Yes.
Swati, from care perspective, Care Edge, you do a lot of analytics, you run a lot of models. So again, coming back to AI, where are you seeing larger challenges in terms of data governance, in terms of model quality, in terms of AI being used, model bias? Can you reflect a little bit on the modeling that BFSI companies are using today?
So I think in this, obviously the use case of AI is undeniable, right? And, but the point is, it's at different stages with different organizations. I think data collection today is not an issue. Data availability is not an issue. You already have a lot of data from the UPIs, the MSME transactions, the GSTs, the account aggregators, etc. The gaps or the issues would emerge in how intelligent is this data, or what's the intelligent inference. Let's say, for example, the MSMEs, right? And you've taken certain payment transactions, or the gig workers, you've taken certain payment transactions. We don't know they were in good times, they were in stress scenarios, and if your models just kind of build on the good scenarios itself, you can throw up certain different you could say answers. Similarly, let's say a typical good credit, AI is not going to bring that factor into it, right? We all know that they're just going to go on logic. And similarly, a good MSME, now you may have had a few months of stress or something, but it's absolutely a very good MSME with a past track record. But the algo captures it. So I think the training of the models, the models training in different scenarios, the good times, bad times, that's one point. Number two is, like I said, intelligent capturing of data in terms of, you've captured the whole cycle or not. Number three is, there could be another risk that we see that, like PD was mentioning, everybody has the same pitch book. Now let's assume you have a lot of similar MSMEs being trained on the same type of models. So everybody is kind of running into the same kind of mistakes. So, or mistakes or similarities. So, you could have a situation where it becomes a little larger ecosystem issue or it does not get recognized. So I think these are some of the few points that we see in the data collection and the data modeling run. Also, it's different for when you run the data models for MSMEs or retail, and it's different for the large credit. Large credit, I think, will still continue to do the traditional way, the typical way the cash flow analysis is, the project analysis is. I mean, there is the scope, at least at this point of time, looks more like, replacing it, the repetitive work or the data entry work getting replaced by AI, but the analytical work, I don't think it'll be reduced to that paragraph. I don't agree with that part. I think there will be a lot more human application in terms of, when you've got crores of money to, kind of sanction, you're going to do a lot more than just read that one paragraph.
So agree, and I think one thing you said, Swati, in terms of models have to go through training in good environments and bad environments to be able to give absolutely, unbiased results. That will take years and years, right? So these are not cycles that you're going to be able to get in 2 or 3 years. This is going to take years of bad cycle, good cycle to be able to even train the model. So what you're saying is definitely more than a paragraph for now, because it's going to take decades for that, right?
No, I agree, and I'll also just give an example. I mean, we all know that after the global financial crisis, all the stress testing were done by, the federal banks and all the Basel committees and everything. But, then of course came the period wherein interest rates ran up in the US and you had perfectly good banks going down. We all know the story of Silicon Valley Bank, right? And that was not a credit risk failure. That was a market risk failure. So, perfectly good investment portfolio because the interest rates ran up and you had a short-term portfolio over there and, the whole value went down. So, you're right. I mean, we've got to run it through years and years of data and cycles too.
We'll come back to that, thought. But before that, Ani, from a funding perspective, so you help from a funding perspective, whether it be equity, whether it be debt, securitizations, private credit. How have we seen the funding landscape for NBFCs evolve and change, and what are you expecting in the next 2 to 3 years?
So thanks, Pooja. I think if I look at it, I think the most matured fundraisers, if I call, is the NBFC market. I think there's not one piece of product that they have not tried, right from bank loans to bonds to CPs to securitized assets, PTCs, DAs, co-lending, and every possible route that I think they've tried. I just feel that the mix of the funding is very important, which is not very clearly defined across, right from a AAA to a BBB. And we can see disparities that exist in terms of the mix that you borrow from. It's very important that if you're lending short from an ALM management, you have regulators that have put in stipulations of the way that you manage your liabilities. But the mix is where I see a big dichotomy, and financial flexibility is where there's a big challenge that most NBFCs are facing. You have diversified the source of financing with a little bit of, NCD issuances in the HNI market or the wealth market. However, I don't see that much amount of liquidity, and I think that's a piece that people should look at. It is not just about you issuing a bond, it's also, is there sufficient liquidity and the investors comfortable from that, which I think is some more time to go, at least in the mid-rated space. Second, I, maybe add to what Swati said, that it's a good idea that maybe when you want the investor side to understand and learn your credit cycle, You use AI or information as a dissemination method for communication on a more ongoing basis, which I think is once we do an issuance and we borrow, I think the communication to banking system is on an ongoing basis. But I think on the non-banking system, the communication also needs to be on a more rigorous and more standard basis. If I look at it, the communication parameters that each NBFCs actually communicate differ from entity to entity. So in order for any analyst to do a research and to compare, it's very difficult. So I feel somewhere these are the two challenges, both in terms of consistency of parameters. So if I'm assessing an NBFC in the MSME space or a gold pool or any of them, the parameters need to be similar, while every entity communicates their own parameters. And I think that from a lending community is a very big thing that everyone looks at.
Thank you. Yeah, the funding mix, especially, we always run a polarized funding landscape, right? The bigger guys get all the funding, the mid-sized guys don't, or at least they struggle to get the right funding. And you always see that in the securitized volumes going up, right? So even now the securitized volumes have gone up last year because I think everybody's trying to tap the funding that is otherwise not available to them.
So I'll just maybe try to split it a little bit, and maybe I come from a rating background, so I have a little bit of a dichotomy in terms of this piece. But I think that if I look at debt market issuance data, you've seen NBFCs in the A and BBB actually increase their volumes of issuance by close to about 60% over the last 3 years, which shows that their NCD issuances have increased that much, either in the form of debt IPOs or in the form of private placements. If I go down securitization, in the early days of RBI, we used to define securitization as either direct assignment or PTC. Today, the PTC market is only growing by 10%. It is the DA market which is growing because the NBFCs technically, as we spoke some time back, are going to be supporting the banking system on their growth. So the tie-up is very important. However, I think if we want the financing per se to change, we will have to, as I said, go back to that mix of how much of DA, how much of co-lending, and how much of securitization. Because that, I think, if you ask me, is where the challenge exists. Because the margin squeeze comes in there from a lending to a borrowing cost.
We'll just switch quickly prongs in terms of partnerships. So we all know, as they mentioned in the banking panel as well, one of the key themes, one of the key prongs and important prongs that people look at is partnership in the ecosystem, whether it be with banks on the co-lending side, whether it be with fintechs in terms of all risk analysis, fraud, documents, etc. So going into partnerships, Anuj, quick question. UGRO has done a fantastic job in terms of partnerships over the years with fintechs and banks. And now embedded lending is also becoming embedded e-commerce platforms. That again is coming up as a different prong in terms of partnerships. How are you seeing and how is embedded lending becoming increasingly important? Is it becoming important in the MSME space? How are you looking at it?
Yes, so I just to explain a little bit on what embedded finance is in this context. So India is a very now one of the finest payment ecosystems, and fortunately, unfortunately, there are 4 or 5 big players who have all the market as far as UPI is concerned. In context of MSMEs and more specifically small retailers, now more and more transactions are happening through QR. And when typically 5 years back, when you have to lend to a small retailer, you hardly had any data. With the QR code coming in vogue, the daily transactions of a small retailer today can be read and analyzed. What embedded finance is that a lender gets embedded inside a payment ecosystem provider's app. So let us say if I am a small retailer and I do a daily transaction of 2,000 rupees through a phone pay or a Bharat Pay or a Paytm, etc. And by virtue of the lender getting embedded into that phone pay app, the lender is also able to read how much transaction is happening on a daily basis. One of the problems of a small micro SME is that in the traditional lending cycle, it's an EMI thing. So one day in a month, he has to repay that loan. But because of the vagaries of business, it is very difficult for him to arrange all that money on that day. In his mind, if he's paying in the same month, he's doing fine. But the moment you transition him and get it more aligned to his daily cash flows by making a daily repayment product, then a lot of this problem gets solved by design. So what basically embedded finance is that you get embedded inside the payment ecosystem, you read the daily cash flows, you juxtapose it with the bureau repayment behavior, and give that small retailer an eligibility which is push of the button. On the back end, there is a lot of ML and AI which is working. It's reading all last 6 months, last 1 year, transaction volumes, etc., and giving him an offer. And when he says yes, you are able to give him a loan. And from next day, the daily repayment starts. So the power of this is that, let us say, you give him a 1 year loan for a daily repayment, and the retailer is paying 100 rupees daily, then actually you can give him a loan of 36,500 rupees. Otherwise, for a 1 year loan, he would have paid 3,000 or 4,000 rupees on a monthly basis. So a quite revolution is happening on that side. And just to give you some numbers, about 25 million retailers in India are actively using UPI. And out of that, about 6 million have sufficient thickness in that daily transactions where a lender can go read and give him a loan. So the small retailer lending problem in future is likely to get resolved through embedded finance. So we are, of course, it is very, very high potential, and we are very, very enthusiastic about it.
Thanks, Anuj, for a good detailed explanation. Tripti, from a Shapoorji standpoint, you are looking at supply chain financing largely through co-lending partnerships. From an operational perspective, what do you think are the determinants that would make a co-lending partnership a success or not? And what are some of the gating factors that you're finding today in terms of co-lending partnerships and the ability to scale those?
So at Shapoorji, our main particular business model runs on co-lending. And for example, if I have to take Ugro as maybe one of the co-lenders, every particular co-lender that I kind of work with, their particular style, way of working on credit underwriting, processes, policies are very, very different. And so is ours. So when it comes to the co-lending part of it, it is more like a joint venture that I have to kind of deal with, because I have to kind of merge what is there internally when it comes to the credit underwriting part of it, look at a particular corporate credit internally, and then kind of also match to what kind of deals is maybe a Ugro kind of a thing looking at. So looking at the nuances of different policies, different ways of kind of looking at credit, and then kind of merging it together as a joint venture and giving loan to the end entity or the corporate is something which we end up facing. It takes somewhere close to around between 3 to 6 months also for a particular joint venture partnership to kind of start, because to fix everything in the right respect and the right way of things is something that we do from the start. And here even AI kind of comes into a picture, wherein compliance for us in the banking BFSI industry is the backbone for anybody for that matter. And even when it comes to our particular compliance system, we make sure that if there's a new particular circular which is kind of coming, a new particular disclosure which is coming for a particular maybe small finance bank, a particular NBFC bank or anything as such who we are co-lending with, we are very, very prompt in kind of understanding that, okay, these are the things that we will need to kind of adapt to, and these are the things that maybe the other co-lender will need to kind of adapt to. So this is one of the things which is there. It's just the time that the partnership starts and to kind of get accustomed to how the co-lender's way of working and then grow that particular book deal by deal is something which is there. Otherwise, RBI has kind of made sure that both of the co-lenders in this particular case have to be accountable for the credit underwriting processes, repayments, everything. And yeah, we end up kind of going about it that way.
Thank you. Swati, I will come back to that earlier point we left in terms of AI and interconnectedness. And happy if, Hani, you want to respond to that as well from an investor lens. You mentioned a very big crisis that happened right back in 2008. I don't think we can all forget. That was a systemic risk, right? That was a systemic issue. And that had been built up over years, right? Now, given AI, and like we said, we're all assessing the same data. Models are learning on the same data. Models are learning on the same economic cycle. There is an interconnectedness of players. There is an interconnectedness of data. There's an interconnectedness across the system, right? Is there something from a risk perspective that you're seeing as the BFSI companies that you work with, are they building this risk into the models that they're building? And how are they, if they are?
Loaded question. Okay, so yes, of course, I think we have two NBFCs over here, and I'm sure they're going to say yes. I would just say, I would put it this way that, obviously with new technology, new things, new type of risks emerge. Some of the risks, that we spoke about, let's say getting trained on the same model or not capturing the cycle and all. So you would have preventive measures, and I think one of the ways is, the way early warning systems are getting incorporated. I think it's also an RBI mandate and stuff like that. And earlier, if you really look at it, that's at least what we see from K-Rich consulting part of it. The early warning signals earlier used to be typically, DSCR or let's say more on past data. Okay, you missed your earnings, you missed something has happened. The new systems are more about predictive. And therefore, based on the AI training, etc., you are in a better position to kind of look at predictive ability. So let's say, for example, the same farmer who's got a track record, etc., but because of a drought or a flood or something has missed a couple of EMIs, the data trains itself on it, and the model itself throws up and says that, okay, a drought is coming, this guy may kind of miss the payment. Or the way embedded finance example Anuj explained to us, that OD credits may be calculated. So I think the early warning signals systems are getting evolved. A lot of predictiveness is coming over there, and all that is all possible because of the behavior, the data, the running through the cycles. But at the same time, we all need to understand that the governance metrics should be such that, and the frameworks should be such that, there is proper accountability. And that's where I think the latest RBI paper also talks about it. Who owns the final risk? And what's the governance mechanism of the model? And, what's the logic behind the model? I think if you have all these governance metrics in place, how the model has been built, what's the logic, who owns the risk, and who's done the validation for the model. If you have these things along with the board centric oversight, then I think these things are there to kind of take.
Ani, you want to reflect on that from an investor perspective?
So I'll just say is that I think in the NBFC space, I feel it is important to also, I know people do look at risks. You have RBI, you have the regulator talking about various policies in order to manage your ALMs and maintain liquidity at the same time and manage on NPAs and give you signals in advance. I also feel that it is important that as we are growing and we expect the sector to grow, size is going to become an important element from an investor standpoint. So consolidation in the sector, if you ask me, is something that investors would want to look at, because if you're focused only on one particular kind of a segment or a sector, and if there is an impact, the idea would be not to have that impact fully on the entity. So if I had to say microfinance did see cycles and you had the whole sector have an impact, but if you've had a mix of a book, then it actually gives you a balancing sort of approach. And I think that is possible today from either a consolidation approach, which I think that is where larger entities, we may say, have a piece, but I think that is a key element I would put at least.
Yeah, Anuj.
So I just wanted to add what Swati was saying on early warning. I remembered an example very recently when the Middle East war broke out, and there was a kind of a minor crisis on commercial LPG. So we started for our F&B portfolio on small retailers. We started watching the daily transactions because we had that data. About 3 years back, we would have done that as a postmortem. So we would have seen in this quarter what would have got impacted. But the power of data is that if you have a site on the daily transaction of a small restaurant, then the moment the crisis hits, you start watching. And as a cohort, once you start watching, you start seeing the trend. So that is the power of how things are moving.
Thank you, Anna. Do you want to
If I can add to that as well. So again, the data of the vendors that we have, as well as the anchors that we have, EWS system, which is there internally built, it's learning from a lot of cycles that we're kind of seeing. We're building more and more context to all of these particular learnings as well. And that's when it's kind of throwing a lot of things as very early warning signals rather, and making us aware that, okay, you need to have these kind of clauses in our particular agreements to safeguard a particular loan from actually kind of either going bad or even if there are any delays or anything as such. So this particular system, it is very, very crucial for all of us in the BFSI sector.
There's a constant learning from the EWS, and then you go back and build it into your underwriting criteria, and hopefully that cycle continues. And we don't get into a huge systemic issue in a decade or so. Just from and I know you, Hani, you sort of touched upon it from a consolidation perspective. So given that funding, like we said, is going to, disproportionately to the larger players, the mid-sized players are, and I always have struggled a little bit. There is higher compliance costs from a regulatory standpoint. So in the next 2 to 3 years, how do you see this consolidation? Would it be mostly from a capabilities build-up perspective? Are you seeing it more from a distress perspective because of lack of funding, or how are you seeing this sector consolidation play out?
I'm not sure whether I'll sound positive or I'm not trying to sound negative, but the way I look at it is that, it's been 20 years that I've been looking at this NBFC sector, and I think we've been talking of consolidation over every 5 years sort of period. I don't think we have seen as much of consolidation. In fact, I've seen more consolidation in the larger players than I have seen a consolidation in the mid and the lower segment. I somewhere feel that it is important to understand that capital will get refrained after a point of time because of access of data, availability, information, and in terms of risk that I foresee on a smaller player if there is a larger impact. That is the reason that I believe that for capital to be on a consolidated basis available, there is that much capital, there is more capital coming in, but it's a good idea for you to look at it as a mix of equity and debt and try to look at a consolidation in the mid NBFC space or in a fintech space. I feel that there are a lot of AI driven fintechs, maybe a consolidation or a merger with an existing platform which is already a more human-based NBFC, may be a good approach because it brings benefits on both sides. But I think that is an important piece. Otherwise, it's not fair to say that only the larger guys are getting capital or it's disproportionate. There is capital available, but it's going to get more and more difficult to convince the investor to allocate that much capital. That's all.
Anuj, you have done 2 inorganic, sort of consolidations in the last 2 to 3 years that you grow. How do you see NBFCs? Are you looking at more capability build-ups, fintech partnerships? For instance, there is, like when we're talking about interconnected systems, Flipkart recently got an NBFC license, right? So now we're looking at e-commerce players getting into the NBFC space. So there is an entire interconnectedness here. Again, back to that same point. So how are you looking at the space? Are NBFCs looking for certain capability build-ups where they are looking to, look at fintech partnerships from an acquisition perspective? How are you seeing your sector play out?
So there are 2-3 perspectives. First, broad perspective, especially in NBFCs, there are, I think, 2 or 3 classes of NBFCs. One, which are very large, with a very large pay. And the fact of the matter is that they have a disproportionate advantage as far as cost of funds is concerned. Why? But they are very big. So they are by nature not very good at solving a very small problem. But they're almost like banks. But when they start getting into a target segment, which is traditionally for a smaller NBFCs, then that can lead to consolidation. Because that cost of borrowing arbitrage cannot be met. As Hani was saying, from securitization perspective, if you look at the total bank borrowings, 80-85% of that is going to AAA NBFCs. So they will keep getting bigger. So there is no running away from consolidation in the relatively longer run. Coming to, in our case, we did acquire 2 companies. The first one was more on capability building. We acquired a fintech 2 years back called MSL. That was primarily to get a technology platform which can give us a seamless integration in embedded finance. And whatever we have built after that is primarily because of that. So it was more capability building. The second one, we acquired Profectus Capital last year. It was more tactical in nature. It was a very similar portfolio, about 1/4 of our size, all secured, prime portfolio. So we wanted to rebalance our portfolio because we wanted to press the pedal on slightly higher yielding assets like embedded finance or a smaller ticket lab. So the reasons were different, but in general, till the time smaller NBFCs have a very clear USP in last mile solution of a problem, till that time they thrive. But the moment a bigger player identifies that particular target segment as their own, then there is a case for consolidation.
Thank you.
Sorry, can I just add to it, Pooja?
Yes,
I'll
please.
just say is that there is capital available, and I'll leave it. There's a debate I have with a lot of issuers, is that you want to raise capital if you're doing securitization, you're lending at an X rate. Let's try and get to financing as long as you're securitizing based on underlying asset risk. So even if that particular PTC is priced higher, it should not matter because it's linked to the underlying credit risk. And then there's a lot of capital available.
Thank you, Hani. Since we have a couple of minutes left, we can take 2 questions from the audience if there are any. Yeah, they have, yes.
Hi, that was very insightful. My question is that today there are large chunks of the community that are getting digitally marginalized, and as a result of which, there could be an AI bias, and AI could hallucinate. So what do you have to say about that? Because the tendency is in such situations, you end up trying to fix the code and the algorithm. And you just keep on and on doing that, whereas actually the core problem is with the data that you are feeding it in with. And it's totally marginalized. So in such situations, especially for financial services, this could become a major hurdle or a risk. In fact, I would say an issue. So maybe your inputs or insights on that front. How is it being managed?
So I'll attempt. We have to be very careful on what problems we want AI to solve at this point in time. We are in a situation where we don't know what all it can solve or unsolve. So the way we are approaching is to break down the problems as sharply as possible and feed data only for that problem to train that component of AI. And then it works well. But the moment if one wants to paint everything together, then that kind of hallucination or other manifestations can occur. So we have to be very careful where we want to use it. If data is available, then AI really is not required, and machine learning can solve your problem. So machine learning is unbiased from that perspective. The moment you add human decision making on that machine learning output is what AI is. So if you can segregate both of them, then in the longer term it will be beneficial. But yes, the risk which you are saying is real. In the rush to implement AI, it is very much possible that some of it will happen. We have already seen it being happening. But as long as we are very clear on what problem, and it will not solve all the problems. We are not even in a situation to define the problem clearly. If we can break up the problem and then apply AI there, it is likely to give best.
No, I'll just add one line. If there's a problem, there's an opportunity also. So, you can also be the converse. If you're saying the marginalized guys are available, it could also be an opportunity over there, right? So, and entities are, ROI creative, they will work out, scenarios wherein this can become a commercial base.
I have a question and a suggestion together. First of all, I'd like to thank IMC for a fantastic session. Usually we see as a country and even at IMC that the sessions are on use of technology and AI into businesses and corporates, but we don't have discussion around the regulatory framework and governance, the use of technology and AI in those areas relating to banking or other areas. Now in a country like India, where a case disposal period is 300 years, early warning signs, embedded finance, etc. is good, okay. But if someone decides not to pay or someone decides not to enforce contract, isn't it an early warning sign? So maybe as a pioneer, IMC could also think of a session and a thought process into that. Thank you very much.
Thank you. Thank you. And thanks to the panelists. Thank you for being a good audience.
Thank you.
A loud round of applause, ladies and gentlemen, and thank you, Ms. Barbani. and our panelists for highlighting the facets of digital lending in the NBFC sector. May I now request Mrs. Pooja Barwani to present a memento to our panelists as a token of her appreciation and gratitude. Mr. Anuj Pandey, Chief Executive Officer, Grow Capital. A loud round of applause, ladies and gentlemen. Ms. Hina Jalan, President, Investment Banking and Credit Solutions, Trust Group. A loud round of applause, please. Ms. Swati Agrawal, CEO, Advisory, Care Analytics and Advisory Private Limited. I'm not able to hear you all. Ms. Srupti Navani, Chief Operating Officer, Shaparji Palanji Finance Private Limited. May I request Mrs. Sunita Ramnathkar, President, IMC, to present a memento to Ms. Pooja Barwani as a token of her appreciation and gratitude. May I request all the dignitaries to come together for a photo? May I request all the dignitaries to come together for a group photo? Yeah. And mind it, ladies and gentlemen, it was one gents and all ladies panel, okay? There was only one who was standing against all these ladies, okay? So a huge round of applause, ladies and gentlemen. Mr. Anuj stood up with all those ladies in bang. Thank you, ladies and gentlemen. We now move on to the next session titled Insurance in the Digital Age. It delivers critical insights on AI-driven underwriting and risk modeling, AI-enabled frauds and claims management, embedded insurance and insurtech partnerships, customer engagement and digital distributions. May I have all speakers? To moderate this session, may I humbly invite Mr. Ravi Sheshadri, Strategic Advisor, Insursa, Dallas, Texas, USA, onto the dais. And the esteemed panelists joining us are Mr. Aditya Gupta, Secretary General, Life Insurance Council, Mr. G. Srinivasan, Managing Director and CEO, Galaxy Health Insurance, Mr. Mahesh Balasubramanian, Managing Director and CEO, Kotak Life Insurance Company, and Mr. Sanjeev Srinivasan, co-founder, Anaira.ai. May I request all to join on the dais? So the stage is all yours, Mr. Sheshadri, till 7:30 p.m.
So good evening, everyone. This panel discussion will be concentrating on the insurance space. How does insurance happen in the digital age? And while people were talking about by 2047, how it can reach everyone, etc. So we have a allied team of panelists, and as I ask the first question, I'll be introducing each of the panel members as I go through each for the first question. The first question is to Mr. Aditya Gupta, who's the Secretary General of the Life Insurance Council. He has been a senior member of the LIC, has been as MD and the Executive Director of LIC, having worked in the Life Insurance Corporation of India, which is biggest mammoth in the Indian market, and even having a global records. Nice to have you here, sir. Yeah, so now the first question to you is, all of us are talking about the digital era. It can reach to everyone. In your personal opinion, how do you feel technology can help reach every nook and corner of the country?
Yeah, good evening. Thank you for having me here at IMC. See, for life insurance, one had to wait for somebody to knock the door. That was some decades ago. And he was possibly not wanted at the door also to speak about the subject. But how things have changed over the last few decades is that yes, today everybody has got a handheld device in his hand whereby actually he is knowing something about it. And not only that, he is learning about it also. He is learning about the accidents which are happening. He is learning about the perils of life, living long and living short also are known to him. All this was told in a narrative story by somebody which nobody wanted to hear. But now, less can be said, more can be understood by the help of the technology, by people's own language, own sentiments also. So since I was in the life insurance industry, somewhere in some part of the country, talking about it was a taboo and another part was a practical thing. So, but with technology, sir, I am sure it reaches everybody's palm. It reaches everybody in everybody's language. It reaches with the testimonials to everybody, and it reaches everybody about the benefit it has. So to explain the benefit few years back was very difficult, but now half of it is already known to him, and technology adds to the another half of it. So that is how I believe urban, rural, deep, jungles, and maybe places far-flung as Port Blair also, or some parts of Nicobar Island also. Now people are aware about the insurance per se and life insurance in particular.
Thank you, sir. We move on to the next panelist, Mr. G. Srinivasan. Mr. G. Srinivasan has held senior positions in the general insurance industry, one of the thought leaders in the GI space, having held as a CMD position in United India, then subsequently as a CMD of the largest company in India, New India. Presently, he is heading the Galaxy, which is a health insurance company. So, sir, my question to you is, health insurance, everybody is saying, and I also see from the numbers, is growing very fast. But still, there is always an opportunity which people say that we are untapped market. According to you, how technology can help in reaching out to every Indian?
Thank you, Ravi. First of all, I would like to thank IMC and my old dear friend, Mr. Narendra, for this opportunity. See, health insurance today is extremely important for everyone. I don't think anybody in this country can live without health insurance. I mean, the whole country realized the importance of health insurance when the COVID pandemic struck us. So the awareness of health insurance today is very prevalent. I mean, there is really no need for us to go and convince people why they should take health insurance. But the problem is, we still have a large section of the Indian population who don't have health insurance. Almost 40% of the population has no health insurance. The remaining, whoever is insured, doesn't have adequate health insurance. They may have a policy for a very small sum insured, maybe 3 lakhs, 5 lakhs, which today is not adequate. Somebody gets admitted in a hospital for 5 days or 6 days. So I think we have a big challenge. One of the challenges of taking health insurance people, I think which applies to all forms of insurance, is how do we reach people? India is a huge country, geographically a very big country, and a huge population, and a large number of people still live in villages and semi-urban places. Can we have brick and mortar offices? Not possible, because it's extremely costly. So we need a cost-effective mechanism to reach people. This is where technology, comes into, very handy and helps us to reach out to people. Fortunately, the last few years, the insurance industry has been extensively using technology to reach out to people. Today, you have, digital aggregators, using technology to sell insurance policies. Today, the customer onboarding is entirely technology. I mean, I can make this statement on behalf of all the companies. So we need to use technology more and more so that, with a very low cost, we can reach out to people, we can explain to them the product features, onboard them. Because today, insurance cannot afford to spend too much money in distribution. That's one of the challenges we face in the insurance sector. Because if a lot of money is spent in distribution, there will be very little money available to pay claims. So we have to minimize both the operating cost as well as the distribution cost. This is where technology plays a very important role. Today, we even use artificial intelligence in terms of calling customers for renewals, explaining to them the insurance products without a manual intervention. So technology has a very important role, but I would like to add a word of caution here. insurance is still a product where people want to touch and feel. So we need human intervention. It can't be completely technology. So I think a phygital model is probably the best way, at least for some more time, wherein insurance can be taken to people. India, fortunately, today has a very positive environment. A lot of youngsters, tech-savvy youngsters, very high penetration of internet, smartphones. I think the insurance industry trying to leverage all this, to reach out to people.
Thank you, sir, for making it very clear that the insurance industry doesn't go purely on AI or a click model. It has to work on a brick and click model for some time, then move to a pure click model. Thank you, sir. Moving on to the next esteemed panel member, Mr. Mahesh Balasubramanian. Again, today the panel members have a variety of experience from the insurance space. Mr. Mahesh was the CEO MD of Kotak General Insurance. Presently, he is the Kotak Life Insurance. So from your experience of both GI and LI, reaching out to people, insurance is a business where we always find, as he rightly said, it's a push product. Not only in India, even if you talk to people in Japan, in various conferences, where I meet them, they say it's a push product there also. Do you feel technology can help in reaching out to everyone, or it has to be an emotional thing also? What do you feel about that?
Well, thank you for having me on the panel. I think insurance is a wide subject and a complicated subject. So if you look at products, there are products where customer is happy saying that I'll do it myself. There are products where he says, can you do it with me? And there are products which he says, can you do it for me? Right? So there are different sets of products and different sets of customers. So if you look at products which are on the general insurance domain, especially motor insurance, third-party insurance, two-wheeler insurance, I think those products have today gained tremendous traction in the I'll do it myself way, where customers are coming on to platforms, comparing products and purchasing and moving on. But when it comes to products like health insurance and life insurance, right, the thing gets a little bit more complicated. The reason because we are also living in an era where millennials contribute about 30-35% of our population. Today they probably spend about easily 35-40% of the consumption is millennials, right? And that's where life insurance is caught a little bit in a bind, because we are in the world of instant gratification today. Everybody wants to see results today. Whether you understand FNO or not, whether you understand mutual funds or not, everybody is busy putting in their money, most of them losing it. Some people believe they'll make it up in the future, right? So there are a lot of investments which are happening in FNOs and SIPs, etc., because people find it easy where they're getting instant returns, instant gratification. Life insurance is a little bit more complicated, because what are we telling our customer? You be good, invest for about 10 years, we'll take care of you when you need it. That doesn't appeal to people today, because everybody is looking at instant results. So that's where the life insurance industry's push factor comes in. But having said that, today can we now try and see whether we can morph ourselves, use technology to reach out to customers, use technology to give more relevant pitches. Our problem is not awareness. Honestly, awareness was an issue. Today, I wouldn't say awareness is much of an issue. It's inertia, which is a bigger issue. Customers always feel, baad mein kar lunga. He always believes nothing is going to happen to me, right? This guy will die, that guy will die, I'm okay, right? So that feeling of postponement of doing these things is what is actually the biggest problem. And that's where technology can come in terms of making sure that we nudge the customers, we get a better handle of the customers. Today, we are using technology for AI especially, at various stages in the life cycle of the customer. And the way I look at AI today, there is pre-sale, prospecting, pre-sale, during the sale process and post-sale process. If I look at only AI, because that's a topic we're really here to discuss, there is generative AI, there is agentic AI, there is conversational AI, and there is computer vision. So if I put all these four in a 4x4 matrix, a lot of stuff is happening already in reaching out to customers and trying to get customers, get the channels to adopt AI at various stages. I think all companies are attempting various things. Thankfully, our results in the digital era were spectacular. I think COVID really accelerated all our digital tools. Today, I think, as Mr. Srinivasan said, none of us haven't seen a proposal form in maybe 3-4 years. Right? I haven't seen anything which is moving to me as paper. Everything is workflow, everything is scanned, everything is uploaded, OCR is used, computer vision is used. So today, 65% of our claims are paid immediately, right, without any human intervention. We've already reached that stage. So there is rapid digitization of processes which are happening. There is rapid automation happening in our industry. And I think the last problem to solve is make customers buy our products. For that, we need to make it more simpler, make it easier for the customer to purchase with a lot of user UX experience, and having some method of making sure that we reach out a simple message to the Gen Z, and thereafter from that message, 2-click, 3-click process where they can purchase what they want. So the products have to be extremely simple, journeys have to be extremely simple, and we have to make sure that we prod them to buy rather than we going out to sell. If we go out to sell, distribution costs will always be expensive.
Thank you, sir, for explaining threadbare on the entire process. Now we move on to the next elite panelist, Mr. Sanjeev Srinivasan, who is a co-founder of Anaira AI. As I told in the beginning itself, these panelists have very rich experience. Sanjeev has headed Bharti AXA General Insurance for 5 years. The guy in Acco, one of the most digitalized platforms. He was the CEO for Acco for 3 years. Sir, the question to you is, today, the market moved from what is called web retailing to quick commerce. Amazon, Flipkart was once upon a time a great name. Today, the quick commerce, Zepto came, things started moving very fast. I want my product within 5 minutes, 6 minutes. This is how. Now, having worked in the GI space for a long time, heading 2 companies, today you are enabling the insurance companies with the technology company. How do you feel technology can help, one, in distribution? Number 2, the customer experience, which the present day youngsters are expecting everything to happen immediately. It has already happened with railways. Even before you get the railway ticket, you get the SMS of the insurance. That's quite simple. How do you feel technology can help? Because having your rich experience in the general insurance, now helping the insurance companies to technology, how do you feel technology can help in the various customer experience and distribution?
Thank you. Thank you for having me here. I think a good part has already been answered by the 2 gentlemen here, but I'll still attempt to build on that, or maybe with a slightly different view also. I think 2 or 3 things happening. I see it in my own family. The way I look at insurance is not the same way that my wife looks at the same thing. And that's also truth about marriage, that we don't look at the same thing in the same lens. And today, the way my son approaches or my mother-in-law approaches it is very, very different, right? So in 15 years back, I think all of us needed advice, which came from a human. But I think today, all of us are in a very different journey to engage with the product. Like my son actually created an AI agent because he doesn't want anybody's help, including his parents. For everything that he decides in life, right? Like most children are, right? So he's built an agent where he is actually set up the agent to say what should be the criteria that the agent should look for as a product. So for him, it should be an established company. It should have a great claims record. And I was telling him, why don't you go to some of the web aggregators? They'll do the same thing. He says, no, I don't want anybody's help. I will create the agent, and this will help me for the rest of my life because it will know what my thought process is, what my beliefs are, and accordingly help me select the best product. And therefore, he's created today an agent for himself, which allows him to help not just insurance, but most financial services products, because again, at a young age, they get into SIPs, etc. So they have their own criteria to kind of look at it. And they also measure the performance of this agent, right? So that is the way one generation is operating, right? My wife, for her 2-wheeler, depends on buying it online. I've always had an advisor who's helped me in the past, and I'm somewhere loyal to that person because he's helped me over the last 15, 20 years, helped me buy the first LIC policy. So each one of us today approaches the same subject very differently. And therefore, I think one of the biggest things technology is doing is to be able to create a very personalized journey for each one of us. Earlier, it was one size fits all. Distribution was very similar. Today, a bank person is selling you a policy, an agent is selling you a policy, a web aggregator, directly consumed customers are being sold by the insurance companies. And within that, the customer segments are very, very diverse. So I think technology helps build the persona. and get the persona addressed by the channel and the mechanism that they want it to be done. Many people don't want to be disturbed. They say, I know what is to be bought, I will buy it, leave me alone. Great, technology can do that. Many people want deep advice, and how can that happen? It can happen through, like Mahesh said, voice AI can also solve it, or a human voice can also solve it. But that determination today getting done by technology ensures that people get the preferred way of engagement, and that itself is very powerful because your propensity to buy increases because you are engaging with the channel or the attempt that you can do very well. I think the other area where technology helps is, I think Srinivasan sir said that well. Earlier, the cost was heavily loaded towards distribution. And like any industry, we need to make the industry efficient. And how does technology and now AI make the industry efficient? For which we need to go deeper into saying, what are the problems we are solving? If we say the problem today or has been in the industry has been that of trust, right? Where people don't trust insurance as deeply as they should, then technology can solve it by creating transparency, right? So if I file for a claim, I can, like today, Amazon gives you a status to say, you ordered a package, it is being shipped, it is in the warehouse, it is on the road, it is getting near your house, and now it has been delivered. What did this do over time is we had zero anxiety about what we had ordered. When we ordered, we had thought about it with a great anticipation that I bought a great product. Now, every stage getting defined is a very easy way for the consumer to limit that anxiety and start feeling good about, yeah, it's progressing. Similarly, insurance can do that now to say, hey, if you have got a car insurance in the car, so car is under repair, this is being done, 70% done, it's now on its way, come to your place, reduces anxiety. Health insurance, again, where is the status of the claim, what is getting paid? Transparency solves for the anxiety that you can have about claims, and that builds trust. So we need to find in each area, what is the problem that we are trying to solve? And the good part is, whether we call it regular tech or we call it AI, today the solutions are very many and they are very deep. You can start by experimenting with it, and then you can go deep as you want to do to solve. Auto claims globally are hugely solved by computer vision. So no human needs to go and visit and see how bad the vehicle is damaged. In India, it is still a very large number, but today a customer can capture the image of the damage, and that image can convert it into a claim payable in no time, because computer vision can look at all the past claims and say this is the closest claim, or it can define what parts and how much labor is going to get used. So things like this is making the process easier, faster, lower cost, and beneficial for the customer. So the areas are many. We need to find out what is the problem statement we are trying to solve. And today tech and AI is actually quite helpful to solve them at a much better speed, at a much lower cost, and real value to customer and all the entities involved.
Thank you, sir, for explaining very clearly on how exactly technology can help each and every customer. Now, coming to you, sir. Life insurance has always been an emotional thing because it's not easy to sell. I can't go and tell somebody, if you die, your family you'll get. If I die, what's a big deal? Okay. So it's a very, very emotional business. Now, in this emotional business, do you feel all this AI and technology can only be an enabler and has to only supplement the normal channel? Maybe I enable only the agents through technology, because agency is one of the biggest forces for life insurance. Do you feel purely technology can do it, or it can only be an enabler? What do you think, sir?
I think, as Mr. Srinivasan just now said, each one of us has our own comfort area. So it will not be one fit for everybody. So depending on his personal area, so somebody who is very, very conversant, very, very comfortable with technology would definitely go with the technology, will understand the subject. And that particular class of people, if I may say, are more educated, more informed, more aware about the subject and about the financial decision which they are going to take about life insurance. Then cut across to Tier 2 cities. People are comfortable with technology, but not very confident. They still want somebody to validate their own choices. Okay, so he is aware about it. He reads, he understands, but the final decision to make payment, he thinks twice before it. But then you need some extra nudge, which is not a digital nudge. So gentle push, a little bit of confidence, which makes him feel, yes, it's going to happen. And after all, life insurance is an intangible product. Nobody is going to look to the benefits, at least for a very long period of time. So that small nudge helps there with the technology. So there, both technology and human emotions come into play. You go to a deep rural village, okay, their technology is known, people believe my son is in the city, he does everything on his own. But here the father who supported his son for a long time is still dependent on some manual procedure. He feels more comfortable talking because he has more time. He feels to validate himself because for him money is much more important than his son in the city. So thereby different classes of people, different demographies, different geographies and different segment. So similarly something which may in a small village may apply to somebody who's having a smaller income, but there is another guy who's doing MCS trading also in the same village. He's a big farmer having huge amount of produce and is also trading on MCX. So that guy may not need the similar kind of advice as his worker may need. So depending on everybody's profile, the technology is going to play a role. Now coming forward, the time spent without technology will be much more higher. The turnaround time without technology will be much more higher. Initially, it used to take 4 visits, 5 visits to convince somebody of buying a life insurance policy. The turnaround time today can be reduced with technology. The testimonials. So if you go to the website and show that how many claims are paid by each company, just for your information, probably in the last financial year, 6 lakhs crores have been paid by life insurance companies as claims. So if you tell this to somebody on a digital platform, on a website where people have more belief, let's say they go to the regulator website, so half of it is done, the belief system becomes strengthened every minute with the help of technology. So the technology plays a very, very important role in building up the mindset of a particular individual. He may be belonging to whichever category as I mentioned. So thereby this process becomes easier. The convincing becomes easier. So different people, so a guy here in a city may ask ChatGPT, you tell me the claim ratios, etc., and everything is there before him in few seconds. But similar thing may not be convincing to somebody in a tier 2, tier 3 cities. So technology is a great enabler, you cannot work, but as Sarah had said, particularly in life insurance sector, the physical and digital is a very good combination and the industry today is working with that. So if you see life insurance companies, they are adopting technology and the technological tools which are available are some of the best tools available in the world. And coupled with some 33 lakh advisors in the life insurance sector, so they are making a good deal of collecting a huge amount of money both in terms of the new business and in terms of the renewal. Thereby persistency also increases once the conviction rate increases. So persistency is also another factor for the life insurance companies. So with the help of technology, as the agentic AI calls up, your premium is due, I don't have money, okay, can you pay in next 15 days? Yes, I will pay after. So what time should I call you? You call me on 15th of May. What time? 5. Is that okay? He repeats. So some type of more conviction develops in people with the help of technology rather than somebody saying on phone. So I am sure these two are going to be a very good combination for the life insurance sector in days to come.
Thank you so much, sir. Mr. Srinivasan, sir. It's always said that there have been a lot of malpractices in selling insurance. Either it is mis-selling or post-selling. This is basically because of the targets and pressures put on the salespeople. And with the net result, the customers suffer. Do you feel introductions of certain tools in technology can help in reducing, I can't say avoid, in reducing mis-selling?
It's a very interesting question. See, insurance is a very complex subject. So sometimes we don't know whether there is mis-selling or inadequate selling. It's not easy for everyone to understand insurance in all its nuances. I always say that somebody has to go through a claim, then he understands insurance very well. So what is important is, I think this is the objective of the whole insurance industry as well as the regulators and the government, that, the policyholders' interest should be taken care of. There should be no mis-selling. There should be proper selling. So technology here plays a very important role because technology means transparency. There is a lot of information available which one can read and understand what are the nuances of the products. But if we have to avoid mis-selling, there are a couple of things I think we really need to do, and this is where technology can help the whole industry in doing this. One is, how do we professionalize the agents and brokers who still play a very important role in insurance selling? So today what is happening is the insurance industry is using technology more and more, but 100% use of technology, like, people take policies straight through the portals of insurance companies. This is still about probably in the health insurance space. I can talk about GA also. Maybe it's relatively less. Maybe in health it's only about 4 to 5%. But the agents and brokers are extremely assisted by technology. So I think this is probably the model which is working at this point of time, and the number of people using technology entirely will keep on increasing. But currently this is the situation. So still there's a lot of dependence on people when it comes to understanding of the policies. If I have to understand whether my health insurance policy covers whatever I want to cover, I still depend on somebody to get all those details. If somebody asks me which is the best health insurance policy in the market, even I won't be able to answer, because that's the kind of complexity which is there in the market. So this is where, educating the people who are in the market selling insurance policies is very, very important. They need to be professionalized. They need to be well trained. They need to be, kind of sensitized how fair selling is very, very important. The second thing is customer education. This is also a place where technology can play a very important role. How do we, bring the knowledge of insurance to the people? I mean, insurance is generally a dry subject and people don't want to, I was just telling my co-panelists, when it was an insurance session, I saw a lot of people walking out. So that's still the, that's how people look at insurance. So people take a lot of interest in insurance when it comes to a claim. That's where they understand, this is something very important. So customer education is very critical, and we need to, in a very simple terms, make people understand what is it in insurance policy, what is covered, what is not covered. Because there's no insurance policy which covers everything. I think this is a simple fact which people should understand. So I think the training of marketing people and customer education are very, very important to prevent mis-selling. So I don't want to use the word mis-selling, especially in the general insurance space, because it's here more of not understanding the policy terms and conditions. So, even if health insurance, when somebody takes a policy thinking everything is covered, but later when he gets admitted in a hospital, he realizes there are so many exclusions in the policy, there are so many limits, he really gets shaken up. Here, this is inadequate selling. I mean, he has not been fully told of what are the nuances of the policy, and sometimes people say that the customers have no time to hear what we say. So that's also, both sides, there are issues. So I think this is what we need to do to prevent mis-selling, and hopefully, this will get remedied over a period of time.
Thank you, sir. Very thoughtful words and very clearly explaining both the life and general insurance overall aspects, sir. And probably there is a claim, the hall is full, sir, again. Okay. Okay. Now I move on to Mr. Mahesh Balasubramaniam. Life insurance, it has been told that it's generally a persistent thing. That's your renewals and retention is very important. How can technology help in this space of renewals and retentions? That's one aspect of it. The second one also will ask, see, there are a lot of things. Customers do not have confidence in insurance as a whole. I pay premium, I don't get claims here. Why NSLA should take a? This is a standard thing everybody is asking. So, how do you feel, one, on renewables technology can help? And do you feel that customer engagement continuously helps in increasing the confidence?
Let me take the second one first because I'm more passionate about that topic. See, and I've been a banker, I've been a general insurer, I've been a life insurer. The difference between what I felt in banking and in insurance generally is that the customer stickiness and the engagement in a life insurance platform is very difficult because you end up paying one premium a year, and when you die also, I don't meet you, I meet your nominee, right? So therefore, you are actually having a problem in terms of building customer engagement, and there are very few opportunities and platforms to build customer engagement. Why has the bank assurance model been so successful? I'm sure all of you in this room have one or two bank accounts, and today with mobile usage so high, you must be looking at your bank account at least once or twice a day because some GPay is happening, some EMI is getting transferred, some SIP is moving out, somebody transferred money. So the banking relationship is a very sticky relationship. And that's why the banking model has been very robust in taking product holdings to 4 to 5 to 6. Wells Fargo went overboard and did extremely high number, but I'm not even going there, right? But we're talking about a product which is the anchor product which helps in building stickiness. In life insurance for us, or in the entire insurance sector, we can't really use claim as a moment of engagement with the customer because that's probably the most inopportune time to build engagement. Health and wellness is something that the industry has been advocating for a very long time because morbidity and mortality are closely related. If I can keep you healthy for a long period of time, I don't make my claim. I don't pay for the claim. So it fulfills my obligation of keeping you healthy and keeping you alive for a long time. Is the health insurance company's obligation only to settle the claim? I'm sure Mr. Srinivasan will enjoy all his customers who have never claimed from him. 10 years you made a premium and you never claimed. He's the best customer for Mr. Srinivasan. And for the customer as well because he's not, he may be a little bit worried ki I didn't get an ROI on my premium, which many customers think about it that way. But the customer's outcome is also great if he's not made a claim. So I would advocate health and wellness. We have been talking to the government. We have been putting it in very many proposals every time. We also thought in the Sabka Bima, Sabka Suraksha, the wellness platforms will be cleared. So I think health and wellness is a great platform. There are companies like Discovery and Momentum globally, which have built a robust financial services business. Discovery is a fantastic example of building an entire BFSI business, starting from health insurance, right? They did health insurance, they got into banking, they got into mutual funds, all on the backdrop of strong customer engagement on a health insurance platform. So wellness is something that we strongly advocate. Without wellness, all of us are trying various things. Today at Kotak Life, we have an app called Happy You. And Happy You is an app which is not for Costa customers alone. Anybody can download Happy You and use it as a health and wellness platform. Incidentally, we are also now using that to engage with our customers better, right? So we need better customer engagement platforms. So that's my second answer. And I'm really passionate about it. And we really hope that someday our wishes will be answered in terms of allowing us to do wellness. Second thing is, today life insurance companies and general insurance companies, by virtue of their license, are allowed to only sell a particular product. Banks today can sell almost all third-party products. A bank today has 22 products to sell. Current account, savings account, forex, gold. I can reload all the products. Life insurance companies sell only life insurance. 33 lakh agents of life insurance industry, why can't they offer mutual funds? Why can't they offer some other product in the same license? We have a very high cost structure in terms of fixed cost and variable cost. If my branches can be allowed to sell other financial services products, maybe I'll be able to amortize and absorb the cost better, right? So I think these are fundamental things which need to come through regulation, come through changing of even the Insurance Act, right? And that will facilitate better engagement with customers. Now coming to the first question of persistency in the insurance industry. As I said, the persistency in the insurance industry is poor only because some customers have misunderstood the product. So therefore we now use, in fact I would have loved to answer the question on mis-selling. And life insurance today, mis-selling is a bigger topic than claims. Because all our claims ratios are 99.5%, 99%, hardly any repudiation, right? So claims is never a topic in the life insurance industry. In the GI industry, it's a problem because there are two probabilities. One is, will I get my claim or not? And if I get my claim, will I get the full amount which I applied or not? Both are variables, so there is a problem out there. For us, what we are doing using technology is that today we have something called pre-verification video call, where we do a recorded video call with a customer, explaining to him all the aspects of the policy. And today we are doing it in almost 10 to 12 languages, from Oriya to Tamil to Punjabi to, we are using multiple languages. I'm going the next step in terms of taking the transcript of this entire pre-verification call, attaching with the policy document and sending it to the customer so that multiple levels of checks and balances are put in so that mis-selling is avoided. Another problem we have is that life insurance contracts are long-term contracts. You contract to pay 10 premiums, 12 premiums, and you get the benefits rear-ended. After 2 years, 3 years, suddenly you feel, no, I don't want to commit this long. Then customers say that I didn't understand the product. There is mis-selling, right? It is not mis-selling, right? It's just that the customer wants to unwind the contract which he entered into. And unfortunately, all our costs are upfront, front-loaded, right? So liquidity in life insurance policies is poor, right? And with liquidity is poor, customer feels that he wants to unwind the contract and mis-selling becomes a problem there as well, right? So for persistency, to answer your question, what we are doing, again, we are using chatbots, we are using nudges, we are doing persistency, propensity at the time of onboarding. Today, all of us have models, predictive analysis models, which says, A, if he comes, his propensity for persistency is very high, B, his propensity is very low. So which means either we sell the product differently or avoid the customer or make sure we build early engagement with the customers, right? Also, technology has been useful in persistency. E-Notch and digital E-Notch has been a great factor because if you have to go and collect premium, when I joined my company, we used to have about 10 to 15% cash premium. I put my foot down and said, no cash premium. We will not take, at least the initial premium will not be cash premium. We said digital notch. And persistency went up because then it goes and debits the customer's account automatically, right? So technology is being used now to automate a lot of stuff, eKYC, notch onboarding, digital notch at the time of onboarding, alternate accounts we ask the customer to choose, right? Chatbots, voice bots going out to the customer, dialing out, pre-dialing to customers, reselling the product. If the customer is wanting to surrender, we resell the product. We try and give him a loan. A lot of efforts being put in persistency. But are we still there? Answer is no. We're all doing better than what we did in the past, but that's no reflection of where we have to be. And I think it's a continuous journey of improving persistency so that customers see value in the insurance product. Insurance product, if you stick the course and pay all your premiums, it's a damn good product. If you don't stick the journey and try to exit in between, sadly the customer loses. And the insurance company loses as well. So it's a loss-loss proposition, which we all should avoid.
Thank you, sir. So we come to the last question to Mr. Sanjeev Srinivasan. We have just got another 5 more minutes to go. Having been in the Indian market, the Middle East, as well as the Asia Pacific markets, one of the key things which I say when people do not accept when I say India has moved ahead fast in digitalization. Yes, digitalization is not just automation. Everybody thinks automation. Use of AI tools, is it really happening? In the Indian market, we have not done it to that extent. Is my personal experience implementing a few software in the African markets. One of the reasons that I have found is Africa, they have never seen a computer, a laptop. They have straight away come to applications. So whatever we say, there's no legacy, say they accept and they go for applications very fast and we are able to implement. In Rwanda, we have done it in a big way. In Zimbabwe, we have done. Now we are doing it in Ethiopia. Everybody says Ethiopia. Now we are doing it in a big way. So according to you, how AI can help in underwriting and claims is one, and fraud control?
I think all three are topics which I can spend an hour. I mean, the panel can spend an hour. But if I have to quickly, because we are also racing ahead against time, I think there are, I think, 2-3 ways. But first, I think every company needs to look at AI to say, what can I do in my little role? Even if HR is doing something, how can they process applications better, right? And then get into slightly deeper areas like underwriting, claims, and fraud, as you talked about. But I think it's these areas where the applications can go very, very deep. What is underwriting? I think there have been enough conversations on the lending side as well before. Underwriting is where we just want to understand the risk of what the product proposes and be able to price it appropriately, right? And to know what is the risk, we need information. Today, we are in an environment where application form, whether it is filled digitally or otherwise, will gather a few information, and many times the information is also declared, it can get questioned later. So what is important is how many data points can you get about a customer, right? I'll give a simple example. If you're filing today, if somebody is buying a motor insurance policy, the variables that go into underwriting a motor policy is which city you are in, what kind of a car you are having, maybe one more factor you can do. But if you look at it globally, and it's proven in India as well, that your credit score has a very strong correlation to how well you drive your car. And if you have a high credit score, you actually deserve a better discount when it comes to a car policy. Second, I think our tolls have got beautifully automated, right? So today, if you're going to be driving on the highway most of the time, your premium should be higher. And somebody who's, let's say, staying in BKC, working out of BKC, hardly moves the car a couple of kilometers within BKC, he or she should be paying a much lower premium. So there are many factors that influence the price of what you can do, very personalized to a customer. Of course, all of this we were discussing some time back has to be consent based. So customers should be open to give consent that my challan data, my highway driving data and all can also come in, or the fact that it's the second car and therefore get a better price. But what tech, data, AI can do is present all this information to an underwriter in such an easy way and keep improving it with machine language models that an optimum risk and a price is getting matched in real time, right? So which means every customer who deserves X as a price is getting X as a price depending on the risk. And if that cohort changes over time, the price also changes over time. So we today look at SME and MSME as a great area where underwriting needs to be done. Today, it's a huge opportunity. India is full of small, medium enterprises which are not insured, primarily maybe because price is very high or they don't believe insurance is important. But again, about an MSME, because of GST data, because of many other areas where information is getting captured, all of this information can be captured without any agent writing a single sheet of paper, digitally through multiple sources of information, again consent based, that can be presented to an underwriter, and the underwriter needs to just decide whether this risk is applicable at this price. Even that can be suggested by the model running behind. So it's going to make life of underwriters very easy. I'm not going ahead and saying that underwriters will get replaced. I think the jobs will get better because they'll look at a more comprehensive set of data points, factors about the customer to be able to take a better call. It'll be easier, yes, no, or maybe with more information required, but a bunch of that information will come through. I think customer experience is similar, that how can AI improve, and I think we talked about some of it in this discussion, but maybe I'll talk about fraud control here. I think in let's say 7 years back, 8 years back, if you look at fraud control, all of this were fraud triggers. That if there is a very large claim, I will get it investigated. Now, a large claim could be for a genuine customer, could be for a non-genuine customer, but the fact is it's a trigger. Above this, it will get investigated. What was missing? I think we saw this very extensively in companies like Amazon and Flipkart and many of these e-commerce companies, because they were seeing fraud not from triggers but patterns in their data. That a particular PIN code will have more people, a person with a particular social influence will have more frauds of returning things faster. And the same today is possible in insurance as well. So how does data and pattern recognition happen, for which even data needs to be stored in a particular way? Some of that effort has to be done, but when that effort is done, some patterns which are missed by humans is recognized by a system, and that system throws a meaningful fraud out in the eyes of the insurer, and that kind of solves. So how do you build these models? How do you use this capabilities of graph data, of identifying how these patterns are deep in the model that it suggests, and that will change the way insurance works. Again, sir would tell you, I think for decades, the percentage of claims that get done by fraudulent people, 5% to 10% is what we as an industry have always been saying is fraudulent. And imagine that inefficiency which kind of moves out. This is just looking at patterns within insurance. If you're able to collaborate with banks, if you're able to collaborate with other institutions, even e-commerce companies, because a fraudulent customer is a fraudulent everywhere. He or she is fraudulent in ordering and returning stuff on Amazon and also is trying to do fraud on insurance. So that pattern recognition will start weeding out people and making it impossible for them to buy on any platform. And therefore, premiums and all these things can come down meaningfully because fraud can be prevented. So I think all the areas, whether it is customer experience or underwriting or fraud control, I think the shift that will happen in the next 3 to 5 years is going to be very, very meaningful, because you can't avoid getting away from a system which is smart enough to detect this. And humans can detect so much, but we should be humble to say, neither do we have the time, and when you have capabilities, it's better that systems do it for you.
Thank you so much, sir. As we finish the thing, we all have heard of the DPTP Act coming on 50 crores or 150 crores, 250 crores. It's one way, it's a challenge. People like me look at it as an opportunity. One of the countries suddenly said our health data cannot go. They were doing their outsourcing activities to India. So I said, we will do N8 workflow automation, a huge order we have got recently, which means technology can help us in any business. You look at whether it's a challenge or an opportunity. Thank you, dear panelists, for your time, and special thanks to Mr. Srinivasan, having come all the way from Chennai to be. Please, please, please.
Mike. Fast. Yeah.
They're really at the deep end. Because they don't have, people who don't have the government job and they have insurance covered by the government. There is no scheme today that's available that actually covers senior citizens. Go to and ask a health insurance company, they will not cover it. Because you're 60 or 70 and you're very vulnerable and I don't want to give you any money. So it's a very, very difficult situation that families today are facing across the country, that where children are actually paying for their parents and they have actually run out of money. What is the health insurance companies doing today to at least address this in some form or the other? I know everybody has some illness, some diseases, but I'm sure there's a way to overcome that and get an insurance premium for it. That's okay. But at least give that opportunity to cover it. Today there's no coverage only. Point blank, no.
I think you raised a very, very important question, a very social and relevant question. So what I would like to tell you is, see, as a country, I think we need to encourage people to take insurance at a very young age and keep it insured till the very end. Today, no insurance company can say no to any renewal of insurance. So if somebody is insured at the age of 50, if he lives till 100, he will get insurance till 100. So that is available. The second is, there are policies available in many insurance companies where even somebody who's 65 or 70 can take a policy and keep it renewed. Maybe the premium is little higher, but it's available. The problem is, somebody at the age of 85 comes and wants to take a policy, there is a challenge because there is already some illness which is waiting to happen. Then the insurance company also finds it financially not possible to provide a cover. That's where the reluctance you must have seen in some of the insurance companies. But products are today available at all ages. Today the regulator has mandated that even if a person is 90 years old, the insurance company should provide a policy. Maybe it's a limited policy, but a policy is available. The third is the government. I don't know how many of you know about it. Those who are above 70, the PMJY, the Ayushman Bharat, is available to all senior citizens. It's available for a 5 lakh sum insured. So today, all senior citizens, whatever be their strata of living, today can get health insurance through the PMJY of the central government. So there are opportunities available, sir. Only thing, you must reach out to the right company and take a cover. So I think probably 2-3 years back, this reluctance was more. Today, the regulator has mandated that every insurance company should provide cover for all senior citizens.
I want to ask a question. I'd been part of the consumer courts on the bench, decided a lot of cases against insurance companies most of the time. And then I went on to IRDAI as a member, advisory member. What you all do is, while you're selling, I was very happy to hear about what video conferences they do. Mr. Mahesh has been talking about. I think that's what you should do. What happens, you give a lot of insurance policies with exclusions. And nobody understands, and the fine print. Many decisions we gave, after that things have changed, but still, I think people are confused. When it happens, they're in the hospital, they are not provided for by any insurance unless there's a clarity. I think what Mr. Balasubramanian said, they do a video conference, clarify these things, because these are the ones which will create havoc in their lives.
It's a great, whatever you said is a very, very valid point. Today, many insurance companies have started doing this video calls, wherein they explain to the customers about the product features, also tell them how they should properly disclose whatever is the health condition, so that, no claim gets, refused later on the ground of non-disclosure or anything. So I think there's much more transparency happening. This is where technology plays a very important role, and of course, more work has to be done on this.
But why can't it be more simple? Instead of pages and pages of small handwriting, which no one can read and go through. I mean, there should be pointers which says this covered, this not covered, this. And what she's saying is, what he's saying is right. 70-year-old, you do not get in insurance. 60-year-old also, you do not get insurance. 65 years old also, perfect health, you do not get insurance. I'm telling you. Including LIC and everybody.
I will relieve Mr. Srinivasan. I'll answer.
I'll just answer this. I know as a health insurer.
Insurance was done earlier when we were young, but we did not get any claims. A cataract, when it came, a cataract operation, they said, no, if both eyes are gone, both the eyes are operated, we cannot give insurance. Only single focal lens we can give insurance. Trifocal lens we cannot give insurance. They give me claims for cotton wool and things like that in the doctor's bill. And nothing for the operation. So then I left that insurance.
No, only word of caution.
Now I'm not getting any insurance.
Only word of caution is, today as I said, policies are available. You must reach out to the right insurance company. That's what I said. Second is, I would request everyone, see, when you take a policy, please spend some time before you take a policy. People just sign blindly and they take a policy in 2 minutes. But so what the regulator has done is today every company not only gives an insurance policy, there is also what is called as customer information sheet, which is a very simplified form of what is covered, what is not covered in insurance policy. So we send it, we are all supposed to send it, we send it to all insurance companies, we ask for their confirmation. Have you read it? I'm very sorry to say only 30% of the customers reply to us, which means 70%.
So this can go on for the next 2 hours.
Actually, I would say thank you everyone. I think we are running out of time. And let me tell you very frankly,
one second.
Srinivasan sir was saying, I think this is the only panel which had evoked so much of response.
Yes.
But now you see, insurance is the only interesting subject in India.
Yes, it is one of the most interesting, one which we have taught over time actually.
Just one point I want to make. I think there is a lot of responsibility that lies on the insurance companies and the people who represent it. Right? My only humble request is, today technology, like any of the LLMs that you look at, provides you with a very simple feature. Upload your policy into that. Even a PDF, if you upload it to any chat, any LLM, right? Perplexity is given by Airtel, or use anyone that you want.
Perplexity.
And tell how does this apply to me and what should I safeguard myself from? It'll give you a very awesome summary. Right? I think we spend thousands of rupees, buying a policy. But if we can spend 2 minutes, it's the click upload, and it'll give you a summary. It'll give you all the things that you have to watch out for. While I'm saying the insurance industry representing them should take all the responsibility to do this, but as consumers, when we are buying something which is so important, let's just upload and see. It'll give you massive insights, and that's a huge benefit of AI. It can also compare.
You can also compare.
Yeah. So thank you, dear panelists, for your time.
Thank you very much.
Thank you, members, for being here patiently and highly engaging. That's what is. So you proved him wrong.
A loud round of applause.
As a life insurer, I love being in panels with health insurance guys. With all the questions are directed there.
A loud round of applause, ladies and gentlemen. It was one of the most interesting sessions, and I think AI solves a lot, and plus insurance should be more transparent. May I now request Mr. Ravi Sheshadri to present a memento to our panelists as a token of our appreciation and gratitude. Mr. Aditya Gupta, Secretary General, Life Insurance Council. Mr. G. Srinivasan, Managing Director and CEO, Galaxy Health Insurance, Mr. Mahesh Balasubramanian, Managing Director and CEO, Kotak Life Insurance Company, and Mr. Sanjeev Srinivasan, co-founder, Anaira.ai. A loud round of applause, ladies and gentlemen. May I request Mrs. Sunita Ramnathkar to present a memento to Mr. Ravi Sheshadri as a token of our appreciation and gratitude. And I would also request all the dignitaries to come together for a group photo. Thank you. Thank you for that very interesting and eloquent session. Thank you. A loud round of applause, ladies and gentlemen. There was no engagement to this extent in any session, okay? Final panel, future of FinTech. What the next decade will look like revolves around what FinTech will look like in 2030, 35, what new models will emerge, and what will be the next big categories. So this is a very futuristic one. So I request all of y'all to please sit in the auditorium, because there are very good speakers here who have come all the way just to talk to y'all. So it revolves around what FinTech will look like in 2030, 35, what new models will emerge, and what will be the next big categories. Sector-focused FinTechs like healthcare, climate, logistics, education, exporting FinTech models globally, next wave of payment technology, AI-driven customer engagement, and building trust in digital-first businesses. To moderate this highly relevant topic, I have the pleasure to invite Mr. Prasanna Lohar, President, India Blockchain Forum, Bank Advisor, FinTech Mentor and Investor, onto the dais. Mr. Prasanna Lohar. Okay. And the esteemed panelists joining him for the session are Mr. Dharmarajan Subramanian, Founder and CEO, ImpactSure Technologies, Mr. Manoj Chopra, Senior Vice President and Head, Innovations and Omnichannel Products, Kia AI, Mr. Sagar Tanna, Founder and CEO, TrackWiz, and Mr. Sandeep Mohindru, Promoter and Director, M1 Exchange Group. May I request all to take their designated seats on the dais. Thank you. And over to you, Mr. Lohar. The stage is all yours till 8:25. Yes. I've given.
So very good evening, everybody in the room, and thank you so much IMC for bringing this segment every year, which gives lot of amplification of how the Indian banking is moving ahead, along with all the sectors like banks, NBFCs, and in this session we'll talk about fintechs, I think, which is an important pillar who are revolving around the banking ecosystem, could be banks or IRDA and so on. I think last 10 years fintechs has done very well, and while we had seen payment, which is one of the segment, is quite nourished and being adopted very heavily in India like country, and which is maybe because of UPI, followed by lending we have done good work. But there are other segments where we have to really do well, like insure, tech or wealth tech or PFM. And what is happening around the world, where some of these types of fintechs are not there in India, which are quite evolved in other territories like Singapore, Hong Kong, US, EU. So in this session, we'll talk about what went well with all the fintech companies or predominantly in a banking industry in India, what is coming in next 10 years, or looking at larger vision for India, where every Indian company is aspired to achieve Viksit Bharat 2047 with right 4 pillars: farmers, women, young entrepreneurs, and eventually how we can do achieve that 35 trillion economy. So we have eminent panel. So I think we'll start with our friend Dharmarajan, and the rest of the panels will follow. So wherein in this segment we'll see what went well in the last 10 years, or when we have seen few of those, when fintechs exactly started in the ecosystem and Dharmaraj. Yeah.
Thank you, Prasannaji, for this wonderful context setting. We've been a little new entrant in this fintech industry or the banking industry, as say, been around for the last 8 years or so. When we tried to enter the segment, we looked at overall how the industry is shaping up. So there was a fascinating movement that was happening. The retail side of banking was seeing a lot of automation thanks to UPI, thanks to the payments, many other new technologies. So the technologies were getting involved in the businesses per se. And so there were a lot of shifts that were happening. However, when we looked at the corporate banking side, there was still a lot of manual processes involved, paperwork involved. You look at trade, you look at a certain other lending, or even if, for example, if you were to open a current account, it would take many days for opening a current account, and if you want your limits to be set, it takes, if not weeks, or maybe months. So those were some of those areas which were also seeing some transition. So we're happy to see that that has taken off very well, and we are seeing holistic transformation in various aspects of corporate banking. So that's how I would say.
Yeah, I think one of the achievement for India is like we are maybe number 3 around the world as far as the number of fintechs are concerned. So today we have almost in the range of maybe 14 to 16,000 fintech companies. That's what we achieved in the last 10-15 years. Yeah, so look for Manoj.
Yeah, so I think your question is that what we did right in the last 10 years, right? So I think couple of things. I think if you look at the last 10 years, I think one innovation or one aspect which is very common is the provision of the DPI, which is the Digital Public Infrastructure or the India Stack as we call it. I think that has kind of made a huge amount of difference to the way fintechs or banks currently operate. So the last 10 years has been mainly around Digital India. How do we provide access to the majority of India, right? So, be it an account aggregator framework or digital identity or UPI or, all of these frameworks were built to make sure that we are able to provide digital access to a majority of and everything was built at population scale, right? And it was built to make sure that, access was provided to the remotest of the areas. One other shift that, being a technology company, right? I mean, Kia.ai, we've been in the industry for about 30 years. We've been in the business of providing banking products. One thing that I've particularly seen, right? So earlier, I've kind of played roles in core banking as well earlier. I used to never get access to the ED or the MD of the bank when we used to provide internet and mobile banking earlier. But now, the last 3-4 years, if you see, if I go to an ED of the bank and MD of the bank, they're more than happy to spend, at least half an hour, 45 minutes, 1 hour with me. That's the kind of difference that is made in terms of just being, the importance of digital overall from a technology service provider perspective.
Yeah, definitely. It's not only bankers has opened up. We have seen RBI himself has started some of those units which will help fintechs. Like RBI FinTech unit came in 2 to 3 years back. And it's not only formation. They are having their own key result areas. Out of that, we have seen RBI Innovation Hub came 4 years back. And ULI, which we talk after UPI momentum, ULI will come. I think a lot of things we have seen. But in this last 10 years, maybe Sagar, you may like to add how compliance regulations have changed those fintechs or added value add.
Yeah. So a very brief introduction because my response is different from what we do. We basically are an anti-money laundering solutions company, right? So our role is to basically catch money launderers. So if you're moving from money from point A to point B unethically, we are the guys coming behind you, right? So that's our role. We are typically deployed with large financial institutions like Zerodha, Grow, and many others, right? So that's our core. Now, the pointed answer, Prasanna, is that I think 10 years back, if the FIIs sold, the Indian markets would tank, right? So typically, if the market is down 400 points and you would ask why, the common answer was FIIs have sold today, so the markets are down. Right? I think over the last decade, the biggest change that I see which has happened to India is the retail investors, along with the domestic mutual funds, and all of that has happened with technology at the center, making it easy for tier 1, tier 2, tier 3, irrespective of whether you have a 1,000 rupee or a 50,000 rupee, you could begin your investments. So that I feel is something that I'm very proud of what we've as a nation achieved with FinTech.
Yeah, I think well said. I think let's hear from Mr. Sundeep also.
Yeah, sure. So thank you for organizing this and inviting me, IMC. Very good question, and it's taking you back 9 years when I came into FinTech. I'm telling you, when we got into FinTech, one of the challenge was that we were setting up a marketplace where our banks have to come and bid for winning the business. So when we used to go to the banks, it was a most difficult point to talk there, that there is a reverse auction and you will place your bid and the best bidder will get the business. That was the most difficult thing. Now, why should a bank do it and why should a company participate in it and why should an SME participate in it? So everywhere the answer was MSME not getting money on time, etc., etc. So I am from outside the industry, I'm not from banking. And one of the things which I saw was that the time taken by any financial institution to start a program for any corporate or an NBF or for a SME or anybody is anything between 2 months to 3 months. There is consonance that yes, we will do this program, credit is good, but it will take me 2 months to start this program, credit, legal, risk, everybody will review the papers and then do it. So now 75 banks, अगर मुझे एक program पे bid करवाना है, then getting their paperwork for every bid will take me X number of months. So what we did is we said, okay, let's standardize the documentation that every bank would like to sign with a customer, and there is nothing digital about it. It's essentially the mind game that can I use the same documentation which, let's say, SBI is using, which PNB is using, which ICICI Bank is using, and this will fly in my internal legal. Okay. It took us 6 months to get at least 12, 13 banks to agree for it. And today in our country, 75 banks and NBFCs put together have adopted the same documentation. And as a result, the invoice gets discounted in 2 minutes or 3 minutes. 2 minutes or 3 minutes. And the payment comes to his bank account in the evening. So that's a kind of an adoption or a change which India has witnessed. And if now we go to any other geography outside India and we discuss these steps, so वहाँ पे standardization अभी KYC में भी नहीं है. ये documentation तो बाद में आएगी. So we are far ahead now in our adoption for the.
So I think well said, and the narrative of all the comments or inputs from all the 4 experts is one thing, which is this digital public infrastructure has played a major role. Definitely owned by government. We have seen how Aadhaar or followed by UPI, or these days we talk about account aggregator, and various new norms came in. So example, UPI came. Before UPI came, there were similar kind of wallets were there, MobiKwik or FreeCharge. And all of a sudden that consolidation and standardization came, which has become norm now. And if you say, let us build a CBDC kind of infrastructure, we say that we already done it, while CBDC is a different ballgame altogether. And look at that angle, maybe Manoj, you may want to highlight the Kia has a very good journey, right? You spoke about how Kia was there, and now post UPI. I'm sure UPI was the accelerating factor for many fintech companies to create business models. It was not only payment, but you talk about insurance or mutual fund or any of the fintechs. UPI is always there as a so DPI how played a major role for amplification of Kia.ai, and how as a company you really aspired last 10 years, and then we'll hear from others. Yeah, like how do you change because of yeah.
How we have changed. Okay, so I think, as you rightly said, I think like a lot of the fintechs over the last maybe 8 or 10 years, UPI was launched in, I think, April, May 2016, and we were there on UPI since day one. Okay, earlier, I think when we started off, and just to kind of give a few numbers, we participated in a few reverse auctions, we participated in a few bids at that time, and we had a 5-year deal at 14 lakh rupees or 15 lakh rupees. Because banks were not sure, we were not sure. In fact, we were sure, banks were not sure how this is going to happen. And we built UPI from grounds up at that time. And over a period of time, what we realized is, we started providing UPI either on an on-prem model or a SaaS model. Some of the banks went on an on-prem model, but there were a lot of banks which were not sure in terms of how this is going to pan out. And therefore, they went on a SaaS model. And in a way, that has benefited us a lot. We, over the last 8-10 years, I think one of the key drivers to the growth of our organization has been UPI, because there has been a massive scale in the volume of UPI transactions. Obviously our revenues have also grown multifold, and we have had kind of a lot of price revisions in the last 8 or 10 years, multiple price revisions when volumes went up. But every time and every single time we were benefiters of the overall UPI revolution. So I think overall, not just UPI, so UPI overall, as a lot of things that happened around the digital public infrastructure framework, those have benefited technology service providers like us.
Yeah, definitely. And on the same note, Sagar, like Aadhaar has played a major role. While we have seen those days, we used to go to the bank branch, open a bank account. Very happily used to say that it takes 30 days to open a bank account. So we come up with the eKYC back in 2016. Then as a necessity, we come up with the video KYC. While there is another railroad which is called as a CKYC. So how do you see CKYC becomes another DPI, wherein now we are hearing CKYC 2.0, and how fintechs will adopt along with the banks?
Yeah, I think for all of us, KYC means Aadhaar, right? I mean, for most of us. So the highest adoption is Aadhaar. The second highest adoption is DigiLocker. And the third highest adoption is CKYC. How many people in the room, if I can see by show of hands, have heard of what's about CKYC as a word? Okay, this is great. Okay, fantastic. So let me tell you the key difference between CKYC and what are your basic rights with CKYC, right? So the first part is, if you walk into any financial product, whether it is health insurance, general bank, or a credit card, you can simply tell them that I have a CKYC number. You're not supposed to ask any KYC from me. Use this CKYC number and get your KYC done. Okay? This is the first privilege that you have. The question is, how do you know your CKYC number? Because Aadhaar is a card, right? There is a simple phone number for CKYC. You give a missed call on that phone number and you get a text message back saying, this is your CKYC number, right? Now, how does this CKYC work and how does it benefit a consumer, right? And how do we see it benefiting? If you go to Bank A, and let's take that Bank A is HDFC Bank, you open an account with them, they will create your CKYC. So what happens? They submit your information to this government registry and you get a 14-digit number. Done. Now you go to the second bank and the third bank, they are not supposed to ask even Aadhaar or video KYC from you. They're just supposed to take the CKYC number, fetch your data and open your account. That's not happening. The adoption is not there, right? Because the awareness is not there. Now, when you, let's say you have account now in 3 banks, you go and, shift from Mumbai to Pune. It's a pain, right? Now go to those 3 banks, follow 3 digital video KYC journeys, right? You want to look good during video KYC, so you don't do it immediately. So you have to do 3 journeys. If you do journey of 1 bank and modify your address, CKYC today sends it to the other 2 banks, saying that Prasanna from Mumbai has shifted to Bangalore. And the other 2 banks are simply expected to take that on record and update the address, right? This is the functionality and the feature of CKYC. It's gradually getting into motion, but it is. And the size of CKYC today is 110 crores, second rank to Aadhaar, which is about 140 crores. So that's the power of the central KYC registry, and this is how we see it. On the flip side, there is something unusual about it, right? If there is a demise that is reported by a family member in 1 bank, that demise gets notified to the CKYC. CKYC will notify the other banks saying this person is no more. So the practice of going and withdrawing cash or using that card and doing that is going to get stopped, because now 1 bank will notify the network. So that's how CKYC functions.
So continuing that, few of my conversations with CGMs, these are those CGMs who represent various banking functions, example CGM of KYC, CGM of cards. And I had asked these questions: what is the end of this KYC? To the CGM who is responsible for, is it that KYC will be always available, like public credit registry we are talking about? And that time it was like year 2023 when CKYC 2.0 was not there. And I had proposed an idea, can you not build a KYC on blockchain, so that, as you rightly said, once the KYC is done, it can be immediately propagated to other banking or insurance or CV, so that we can reuse the KYC, because it takes around 3,000 to 6,000 rupees to open a bank. And imagine banker like us have a 15 accounts, or some of us, you might have more than 1 or 2 accounts. So continuing that, I think DPI has played a major role, like you spoke about Aadhaar, and good to see that is not only creating DPI, there are a lot of enhancements are coming in these DPIs. So we have seen UPI back in 2016, and today with UPI Circle, offline UPI, there are many more things are coming up. So goes with UIDI, we are talking UIDI 2.0. Moreover, UIDI is opening up not only banks, even normal FinTech or tech companies can access offline Aadhaar service provider, which is new momentum they have created last few months. So how do you see DPI adoption? Do you think that will be, as a business model of M1X could have been existed? And you said very rightly, like G20 we have seen, or people said, how do you really export DPI model to other countries? Similarly, I think we have seen UPI being exported, rather experimented in at least 7-8 countries. So how do you see trades are picking up? Do you think more enhancements are going to come in the trades area?
Yeah, so I'll just also pick up a point from your export point. So trades is getting exported outside India, okay? And in one of the BRICS summit which just happened with the government, all the BRICS nation have put in a point together that between the BRICS countries can we have trades. Okay, so if India is exporting to any of the BRIC country or vice versa, then can the trade finance be put on that platform between the 2 countries, and the buyer seller are on that platform, they can approve the invoice and the bank can finance it. So it's a concept which between the BRICS countries has been discussed basis the success of trades in India. And if it fructifies, then it will obviously, that trade as a brand name is Indian industry given brand name, it will bring more glory to India's FinTech. So that's one part. The second part, are new things coming? Yes, many new things are coming. I'll just explain you with one simple example, and it has happened recently. So in trades, and a supplier puts his invoice for a buyer, and only if he wants to get discounting done, the banks come and discount, and then the payment follows. Now, the trades adoption is very high in the private world, and it's the least in the government world. Okay, whether it's a PSU, whether it's a state government or a central government department. So overall, out of overall volume, 95% is private sector world volume and 5% is government sector world volume. However, in the government sector, the suppliers to the government need funding much faster and much more than in the private world. But the adoption is the lowest. Now, how to change this adoption? So one of the points which came up is, okay, can all the payments for SME suppliers in the government, whether financed or not financed, can they be routed as a payment system, which means debit to the government account and credit to the supplier on the due date? Okay. Now, if he wants an early payment, very good. Then that means if his payment is due on 30th June, he wants a payment on 17th May, fine, he can do it. But if he does, even if he's not aware about it, on 30th June, he'll get his payment with a debit to the government, credit to the supplier. Okay. Now, this has been announced in the budget by the Honorable Finance Minister in February. It's under implementation. It'll have its own steps of implementation. It's a big change for the country. And as and when it completely gets implemented, this will be a complete landmark that a supplier is getting his payment on time from the government. Government machinery has its own pluses and minuses of approving an invoice, but at least an approved invoice, he'll get his payment on time. So these are the kind of solutions that are being done to attack the problems which are specific to the delayed payments. So this is just an example of what more
it's
is
a very good example. Like look at country where we have at least around MSMEs, right, which is a larger segment who is looking for a financial inclusion. While you said retail is little being solved, or corporates yet to be done. This MSME area, which is retail, was overlooked, but last 2-3 years with account aggregator and many other models is picking up. And these MSMEs provide maybe livelihood or jobs for more than 28 crore Indians. So we need to take care of these MSMEs who are responsible for maybe I think more than 45 to 60% export what India does. And with this kind of a model, but as this panel is going on, we are getting more and more insights. So goes with the Dharmarajan. You spoke about corporate. So how was the corporate life back in 2005, 2015 and now? With how you see Impacture is creating impact for corporates?
Thank you for that. See, you mentioned about MSME doing, say, 60% of exports. Just wanted to say that what, in broad terms, what it means is that trade is the way of life. The world runs on trade. You asked me about the corporate. The corporate life was different. Entrepreneurial life today started as an entrepreneur very recently. You know, this is my third stint in my career. First 25 years in corporates and family managed enterprises, and now as an entrepreneur. Started with an advantage. We started as an AI company in 2020. Announced ourselves as an AI company just before the buzzword of AI that started. So as the Gen Zs today will call it, we are kind of AI native. So that it started as an advantage there. Of course, it had its own learning curve as to maneuver the banking industry, understanding the banking industry, how AI can play a meaningful role in the corporate banking landscape. You know, this was learning that we had. And we had some fascinating experiences. If I can share one or two use cases we started. So one use cases which we started was with respect to bank guarantee. So corporates would participate in tenders and companies would ask for bank guarantees. And typically at that point in time, about 5-6 years ago when we started, when a corporate applied for a bank guarantee to a bank, typically it would take about 5 working days to issue that. One of the banks with whom we were trying to get an entry or get a POC, just get an acceptance for a POC, they gave us a use case. They said, why don't you try it out? Just see if, some of these clauses, identify these clauses, compare two bank guarantees and tell us whether something is onerous for us or something like that. Then we realized that the banks, which usually give about 5 working days, if a banker was working on a bank guarantee, they would take about 2 hours or so to process a bank guarantee with multiple hands working on it. So they wanted to automate that. So we tried our AI modeling. So that time it was AI, ML, and NLP, the natural language processing. So before the LLMs were actually born, we gave it an attempt. And then when we implemented it, we could bring down that processing time to 7 minutes. Our system would take about 15 seconds to process it. But with some eyeballs and maker, checker, the processes involved, we could bring down the time taken to process a bank guarantee to 7 minutes. And immediately at that point in time, some of the private sector banks, they announced that they could issue a bank guarantee in 3 hours. There were advertisements that came in. So we were proud of that moment, when that we could bring in some change to that particular industry with one product, which was a bank guarantee. Today, after 5 years, today we are working in a scenario where the banks are asking to implement a solution that could provide what they call as an STP process, a straight-through process. If a corporate has the necessary limits in place, if they have some processes already adhered to, if there are regulatory and the governance checks intact, the bank should be in a position to issue a bank guarantee in a fraction of a second. So you request for a bank guarantee and then you get back a bank guarantee through the same channel. So it can be through email, it can be through, so a lot of new age technologies are coming up. So that's a change which we are seeing.
This change is always amplified by the, It change is always amplified by various technologies came in our life. Imagine you expect this change back in 2000, when we are living in the era of maybe 1G or 2G. And post-COVID, we have seen we are land up in 5G. And as more we see the communication technology, the customer behavior changes, say retail or corporate. And you touched upon very important area everybody is trying to learn, AI. And whether it is AI or responsible AI, good to see that RBI is coming with some good guidelines like free AI, how every bank should really adopt. While many banks already adopted with a lot of burn in AI. And we have seen Kia AI, right? It itself is a new avatar of any company. So how do you see AI is really impacting to your company as well as how FinTechs are going to adopt? So I think after this India AI Summit, India has announced many more, maybe 4,500 crores at a central level, or recent Maharashtra's policies to spend around 10,000 crores to really make or to have AI districts. So many more things are coming, and every sector is looking at how they enhance existing traditional operations with the AI. But there are other ways to look at whether it is a good AI, bad AI, explainable AI. But how AI is really impacting finance? Yeah.
So I think overall, I think if you look at the last 10 years, like we were talking about earlier, what we are going to kind of see a shift now is going to be from, let's say, digital finance to intelligent finance. The last 10 years you had, like we spoke about, it was about DPI, which you had Jan-Dhan accounts, you had Aadhaar, you had large mobile penetration, you have account aggregator framework. So all of that put together now, if you look at, you've got a lot of data with you. So the last, like I said earlier, the last decade was more about digital India. I think the next decade is more going to be about how you make use of this data, right? So with so much of data now available with you, and with the advancement in AI technologies, particularly like you mentioned, there's a you are now able to provide a lot of things, like for example you are able to have hyper personalized banking, you are able to provide contextual banking, right? So today when your journeys are very contextualized, and it's going to kind of get better as we move forward. This is also powered by technologies like, for example, or initiatives like embedded finance, or IoTs. Today, if you see, for example, if you log into an Amazon, or if you log into let's say a Make My Trip, when you log into a Make My Trip, they're also trying to sell you insurance, travel insurance. When you log into an Amazon, let's say you're buying an iPhone or a phone, any kind of phone, right? It's kind of even selling you a small kind of insurance for the phone. So this is kind of examples. This is an example of kind of embedded finance, where you are trying to sell products at the source, where it's going to be of maximum use to the customer. So that's an example of kind of embedded finance. But now if you look at with IoT, right? So I also feel like you could have, or you are already having, and you'll kind of go further down. You'll have cars which will kind of pay tolls for themselves, cars which will pay parking fees for themselves. You will have, for example, your ERP solutions already arranging for supply chain finance for your MSMEs or for your corporate businesses. So these are the kind of things that can happen. We are also seeing one other thing as a company, like you said. We are also kind of, while we were experimenting with finance, we are now looking at digital infrastructure. So, we had digital infrastructure. We are trying to see how we can marry digital infrastructure with physical infrastructure. So we've now recently come up with I was telling Prasanna outside as well, that we are coming out with a kiosk which we call as a neo-banking pod, where you are able to carry out most of your banking functions on a kiosk. So you can do your video KYC, and you can argue that you can do this on your mobile phone as well. But this is a complete kiosk which has a fingerprint reader, it has a camera, it has a sign pad, it has a biometric reader, it has a printing machine, all of that. So so if you're opening an account, for example, you can actually type, and if you need any help with while filling up your form, you can do a video call with one of the banking officers, and they're able to take you through the journey. You are also now able to do, you have a kind of a sign pad, you have biometric, you can do a video KYC immediately. And the most surprising, in fact, when we did this, I was pleasantly surprised. You can open an account and you can get a personalized debit card then and there, like a vending machine. You click submit and you can get a personalized debit card with your name, just like out of a vending machine. You can take that debit card and you can use it on ATM machine. So that's the kind of journeys that we are looking at. And overall, I mean, that's.
I think so. Bottom line, AI has really impacted banks while they are creating their own AI officers, right, or AI center of excellences. So goes with the fintechs also. The product journeys are reducing, and while compliance journey is going high. So what is, while we spoke about AI or blockchain, cloud, data, quantum, so technologies are going to really change the way we operate finance. So what's the role of this AI technology in irrespective of your organization, Sagar, and maybe we hear from Sandeep?
Yeah, I think our mission is fighting financial crime, right? That's what we believe in. So I think that AI models, are kind of learning human behaviors, right? So one day my father asked me saying, if I listen to one bhajan, YouTube gives me another bhajan, right? If I listen to two, it gives me the third bhajan, right? तो वो पूरा समझ रहा है ना मैं क्या कर रहा हूँ, right? I said yes, 100%. And if I take that analogy and extrapolate it, I think if you're sitting inside a bank or you're a Zerodha, you will actually look at a customer's trading behavior using AI, and you will say, hey, you know what? I think Prasanna in another 2-3 years, sorry, I'm saying your name, is going to become a financial criminal. Okay, because look at the way he's doing cross trades, right? Look at the way he's depositing smaller cash and checking whether the bank is checking in on him or not, right? So I think AI is becoming very intelligent at predicting what humans will do next. And that's my dimension of AI.
I
So you'll
think
be
just-
arrested before you do a crime saying you were about to do something.
And good to see that. Yes, yes, and good to see that what Sir spoke about how mule accounts, or there are a lot of initiatives. If you look at how RBI or regulator looks at technologies, I think 3 years before there was no single word so-called AI in the RBI's vision statements, which comes every 5 years or any annual report also. Now this year they announced that 5-6 initiatives not only for banks but within RBI, how they can really enhance operations. Sandeep, your last remarks.
I hope his prediction about your criminal behavior doesn't come true. Right. So, just taking a cue from his point, AI for us can play a very beautiful role in establishing or re-establishing or supporting the genuinity of the transaction. Because within India, people are logging in from different cities. I mean, today, on the digital platform and on let's say on M1 Threads. So 2,500 cities people are logging in. Now it's very difficult. You may have done your KYC, AML, money laundering, everything we've done. But the transaction between a buyer and seller, the genuineness other than the GST portal, it's very difficult to establish. Yes, what you depend upon is their past credentials and their past relationship of working together. But if AI as a use case can help establish it, control it, then a lot more can happen in India and banks will get more confidence. This is one such example. So AI can do wonders for us.
I think good, and good to see that how bank and fintechs are collaborating under RBI's, for you say, is as good as RBI or maybe insurance, IRDA, SEBI. There is one more regulator, IFSC, which is unilateral regulator for RBI, IRDA, SEBI and PFRDA, and they are building lot of railroads. It's not only traditional finance, but they are looking at a future finance, maybe tokenization, maybe real world asset, ship tokenization, buying, selling aircrafts. So I think there is a lot to do which is happening in India. But last, maybe everybody can take a view 5 to 10 seconds. The way we had seen savings account, current account back then in 70s, 80s, which is evolved with multiple types of accounts, multiple types of loans. How do you see the next 10 years? What kind of different fintech or banking products will appear? Maybe let's not take more time because I already got instruction. We have some little time is remaining here.
Earlier we talked about inclusivity, now it will be more of participation. Earlier we were going to the banks. What I see is now the banks will go to the individuals through embedded finance, through different means of different products, but it will get embedded. So banks will also become embedded.
Yes, Manoj.
So yeah, in my view, I think it's probably a strong statement, but I think banks which don't adopt technology will be out of business in the next few years. So if you look at with AI, a majority of the jobs that you do today in the banking world or in banks, those can be automated. Particularly if you look at on the operations front, on a lot of product development, whatever you do in a bank, a lot of these things can be automated. So if you are not adopting technology, you can be, and particularly now, what's going to happen is, it's not going to be, overall, the organization that owns the customer data, that's able to provide a very contextualized and hyper-personalized experience. This could be, it could be across fintechs, it could be across banks, it could be across large tech, multiple organizations, anybody could kind of be able to provide that kind of experience. So I think it's going to be overall an ecosystem play, and that's going to kind of really define the way we do.
Yeah, I think we are all lucky to be in Bharat at this phase, right? I think because of the entrepreneurial mindset of our country, I think you will see a lot of 3 to 5 people companies building 1,000 crore businesses because of AI and technology and the simplification that we are seeing in our country.
See, what's happening is that the foreign bank who's not having a shop in India cannot do lending business in India today. Okay, they are worried about legal cases, recoveries, etc., KYC. Now with the fintech and with the entire digital infrastructure of the country gone up in the hierarchy, there is a potential that the foreign banks not having a shop in India or AIFs or such NBFCs being motivated to use the India infrastructure and finance the India business, India trade. And that'll bring a lot of loan capital to India, not the equity capital, loan capital to India, which today is only restricted to people who can go abroad and do bond issues or can do fund, this foreign capital kind of large companies. Medium, small, they cannot even think about doing that. So there's a lot of potential for bringing loan capital to India.
We have seen how some of the foreign banks are coming and taking participation into Indian banks. We have keep hearing. And thank you so much, each one of you, for giving inputs. The way I look at, and you touched upon, from digital banking to, I think, intelligent banking. And slowly, it may appear autonomous banking where IoTs will do transactions, or it will be always backed by security, right? We keep hearing now, after GDPR in EU, we talk about DPDPA, which is the next, I think, 1 year timeline is there. So that's another indirectly fintechs will have to adhere. But I think as a part of autonomous banking, we will see cross-border will be very easy. See, it is payment or a cross-border buy-sell, as you rightly said. Another angle which we will see with the technology coming in, customer behavior change and the tendency to invest fast. So paper money is becoming digital money in form of a central bank digital currency, where at least 100 plus countries are working around that. And some of these good examples are coming in India, like e-rupee, which has come. It will change customer behavior. Could be corporate behavior as well as it's a matter of a new type of fintechs coming in and build those momentum around digital or deposit tokens or in form of a tokenization in real world assets. I will not be surprised. Gold loans will be tokenized, will be traded bank to bank. I will not be surprised. Fixed deposits will act as another layer on top of existing core banking. It's a matter of those fintechs to experiment again under purview of regulators. But it is a beautiful time, and India government regulator always look at how future finance can be built with the help of these fintechs. So thank you so much, each one of you, for giving such insights in this evening, and thank you IMC for bringing these kind of discussions. Yeah.
A loud round of applause, ladies and gentlemen. Thank you to our panel for these forward-looking perspectives and the role of technology and AI in banking and financial services. May I now request Mr. Prasanna Lohar to present a memento to our panelists as a token of our appreciation and gratitude. Mr. Dharmarajan Subramanian, founder and CEO, ImpactSure Technologies. Mr. Manoj Chopra, Senior Vice President and Head, Innovations and Omni-Channel Products, Kia AI. Mr. Sagar Tanna, Founder and CEO, TrackWiz. And Mr. Sandeep Mohindru, Promoter and Director, M1 Exchange Group. May I request Mrs. Sunita Ramnathkar, to present, President IMC, to present a memento to Mr. Prasanna Lohar as a token of our appreciation and gratitude. May I request all the dignitaries to come together for a group photo. A loud round of applause, ladies and gentlemen. You will get your energies filled when you will be out. So now you can clap. Please. It was a very fulfilling day. So, later on. May I request, as we conclude, may I request Mr. Ajit Mangrolkar, Director General, IMC Chamber of Commerce and Industry, to present the vote of thanks. Over to you, Mr. Mangrolkar.
Thank you, Selby. It's been an absolute power-packed 4 panel discussions. This concludes the IMC Banking and Financial Services Conference on the theme Shaping the Future of Financial Services, organized by the IMC Banking, NBFC and Finance Committee. We extend our sincere gratitude to our guest of honor, Dr. Alok Pandey, Additional Secretary, Department of Investment and Public Asset Management, Ministry of Finance, Government of India. Thank you, sir, for your time and for addressing this gathering. I would also like to thank all our speakers, moderators, participants, and members of the media. Your presence made this an incredibly enriching evening. A special thank to the leadership of the IMC Banking, NBFC and Finance Committee for conceptualizing this event and securing such prominent speakers. Dr. M. Narendra, Chairman, IMC Banking, NBFC and Finance Committee and former CMD, Indian Overseas Bank. Mr. P.D. Singh, Co-Chairman, IMC Banking, NBFC and Finance Committee and CEO, India and South Asia, Standard Chartered Bank. Mr. Sachindranath, Co-Chairman, IMC Banking, NBFC and Finance Committee and Founder and Managing Director, Inaugural Capital. Ms. Pooja Bharwani, Member, IMC Banking, NBFC and Finance Committee and President, Investment Banking and Head, BFSI and Tech Investment Banking, Elara Capital. We are also grateful to our sponsors for their vital support. Our title sponsor, Standard Chartered Bank, Platinum sponsor, Inaugural Capital, and our gold sponsor, Kia AI. We look forward to our continued partnership. We also thank our knowledge partner, CareEdge Analytics and Advisory, for releasing the conference knowledge paper. And ladies and gentlemen, this would not have been possible without the fantastic support of the IMC team, led by Bharti, who is a one-man army. I know she's not here. She is doing her duty at the registration counter. And of course, guided by the old warhouse, Sanjay Mehta. Where are you, Sanjay? I think he is present everywhere. And of course, this whole event was held together by Selby. Thank you so much, Selby, because without a great master of ceremonies, you can't put an event together or hold it together. Thank you once again, all of you, for your support and participation. Please join us for dinner.
Thank you, Mr. Mangrolkar. We extend our heartfelt gratitude to our title sponsor, Standard Chartered Bank, Platinum sponsor, Inaugural Capital, Gold sponsor, Kia AI, and knowledge partner, CareEdge Analytics and Advisory, for their generous support and commitment to this conference. Their partnership has been instrumental in making this event possible, and we look forward to their continued support to IMC. Thank you for your invaluable contribution. Ladies and gentlemen, distinguished guests and delegates, a profound thank you for gracing us with your presence. Your participation has transformed this into a deeply insightful and meaningful conference. We warmly invite you to the networking dinner, where we will continue the conversation started today. Feast on the flavors and enjoy your dinner. Build connections and extend today's momentum. Delegates, kindly note that we kindly request you to provide your completed feedback form, which is available at the registration counter. Your input is highly valued and essential for the continual improvements of our events. Thank you for your time and feedback. Kindly hand your completed feedback forms, that is the filled feedback forms, to the IMC representatives at the registration counter. Thank you. Your anchor, Selby Nambishan, take your leave and hope you had a great and enlightening day. Thank you, and please submit a fully filled feedback form at the registration counter. Enjoy your dinner. Thank you. Papers, QR code is being displayed over here. Whoever wants to download the documents or see the documents, please scan the QR code, go to the link, and you can download the file. Whoever needs the knowledge paper, the QR code is being displayed on the screen. You just have to scan it, go to the link, download the file. If download is giving you problems, which sometimes has, just share it on your WhatsApp, on your personal WhatsApp. You will get the link directly, so you can see the document anytime you want to. So both the ways you can do, either download the file or forward the link on WhatsApp, on your personal WhatsApp. Okay.
This is for those who move. Those who don't wait for things to happen. They make them happen. Those who don't ask permission to dream. They don't follow maps. They draw them. and build what isn't there. They don't call it instinct, they call it Tuesday. Because they know the world doesn't wait. And luck? It's just another word for I moved first. At Standard Chartered, we're here for those who never stand still, who want trusted expertise in the world's most dynamic markets. Now is your time. This is for those who move. Those who don't wait for things to happen. They make them happen. Those who don't ask permission to dream. They don't follow maps. They draw them. And build what isn't there. They don't call it instinct. They call it Tuesday. Because they know the world doesn't wait. And luck? It's just another word for I moved first. At Standard Chartered, we're here for those who never stand still, who want trusted expertise in the world's most dynamic markets. Now is your time. They don't follow maps, they draw them. And build what isn't there. They don't call it instinct, another word for I moved first. Want trusted expertise in the world's most dynamic markets. Now is your time.